Good morning, everybody. Thank you for being here. We are live. And I am late. The reason I am late is the internet is not working. So I am using my phone right now to run the hotspot for the stream, which means I hope that nothing goes wrong. For some reason this morning, the hotel Wi-Fi is not working. So we're running, as you can see right there on my phone, the hotspot Wi-Fi, and that means if the stream gets a little weird, it is what it is, because for whatever reason, the hotel Wi-Fi is not working. It was working for the past 3 days. I don't know why it's not working today, but we got the Wi-Fi from the phone. We got the hotspot. Woke up, it was really red, and realized there's a lot we have to talk about to get into what exactly is happening. It is a bloodbath this morning in the equity markets. And, last night it kind of felt like it was going to be a bloodbath, but we're actually seeing the extent of the bloodbath right here. Micron, we'll talk about them. One of the best earning prints we've seen, quite frankly, all year outside of NVIDIA. 433, that stock down 6% in the pre-markets. S&P loses 661. We have officially hit the lows, or not lows, but a new low since November. So November, we were at this sort of 657 range. We are now at 656. If we lose the 650s, we're headed to the 640s. And if that happens, then, it's kind of what people have been saying needs to happen in terms of ripping off the Band-Aid. Maybe today's the day. Maybe this week is the week. But right now, we are down 1% in the pre-markets on the S&P after being down 1.4% yesterday. NVIDIA loses 180. Google is down 1%. Red Cat's down 5%. Western Digital, Seagate, SanDisk, all your memory names, down 5 to 6%. Broadcom, 311, $11 away, going potentially below 300. VG, that's up based on oil and gas, and we'll talk about what's happening there. Nebius down 3, Rocket Labs down 1%, Reddit's down 2, AppLovin's down 3, Robinhood's down 3. Silver and gold, which once again are not your safe havens. Gold is down 7%. I didn't even see how bad this was for silver. Silver is down 12%. The commodities trade is getting wrecked, even though inflation's going up, which would make you think that, you pile into the commodities if inflation is bad, but the exact opposite is happening right here. It is a mess. SoFi's below 17, Visa's down, AMD's down 2%, software's down another 1%. Across the entire board, it is a very, very ugly open. So the question is why? The question is why? And I think the answer is kind of obvious. Trump had a tweet last night, and boy, did this tweet create a lot of controversy. He's explicitly saying it now, and whether you believe him or not, he is saying it, and the markets are not happy about this. Trump, last night, Israel, out of anger for what has taken place in the Middle East, has violently lashed out at a major facility known as South Pars gas field in Iran. A relatively small section of the whole has been hit. The United States knew nothing about this particular attack, and the country of Qatar was in no way, shape, or form involved with it, nor did it have any idea that it was going to happen. When I saw this tweet last night, I could not believe that Trump straight up is saying, we had nothing to do with this. This was Israel. Israel was mad for whatever reasons they were mad about, but this was not us, and we do not take responsibility for it. He's literally throwing Israel under the bus, and you have some people saying, no, he knew about it, but he doesn't want to get the blame. Israel's getting the blame. Maybe, but you have a lot of other people saying Trump is pissed. He's annoyed. There's been tons of reporting over the past 2 weeks that we've covered on the show about Trump not really being happy about how the Israelis have been acting in this war, in particular because they've been targeting oil infrastructure, which, Trump wants to protect the oil for obvious reasons. And then he says no more attacks will be made by Israel pertaining to this extremely important and valuable South Pars field unless Iran unwisely decides to attack a very innocent, in this case, Qatar, in which instance of the United States of America, with or without the help of Israel, will massively blow up the entirety of the gas field at an amount of strength and power that Iran has never been witnessed before. I do not want to authorize this level of violence and destruction because of the long-term implications that it will have on the future of Iran. But if Qatar's LNG is attacked, that's why VG is up this morning because of LNG, I will not hesitate to do so. Thank you for your attention to this matter. I think this tweet right here showed the entire market. Okay, this whole idea of the war ending soon, that's not happening. This whole idea of, we're going to get oil prices calmed down and we're only going to strategically attack their military and we're not going to have all these proxy wars, that's not going to happen. And then you have multiple headlines from this morning, including the headlines from yesterday around Saudi Arabian refineries that have been hit pretty hard, or that Saudi Arabia says, look, we just simply can't operate right now, given how the extent of the refineries have shut off the need for, or the capacity for being able to actually have production. And as a result, maybe this is a pre-market head fake and the market flips green when we open, and this was just like a whatever, but this really does feel like the market finally saying, okay, oil's going to be up for longer. J-Pow's not cutting. PPI was disgusting 2 days ago, and we can't ignore it. And as a result of that, we're going down. And it kind of feels like the majority of people have been expecting us to eventually go down, and now we are seeing that go down. Now traders are not pricing in a rate cut. That was the other big headline that came out this morning for an interest cut in 2026. So traders have officially priced out one cut. The last time we were going to get a cut was yesterday before J-Powell spoke. That was for December of 2026. That is now no longer happening. And as a result of not having that rate cut for December of 2026, the market's also thinking, well, wait a second. If we're not going to get the cut, then what are we doing here with growth stocks? They kind of need cuts to be able to maintain a lot of their momentum. You're starting to get the sell side come out and say, hey, we're scared as well. BTIG, this is what they put out to their clients yesterday, because we have lost the 200-day moving average. This will be the third test of this general area. We have little confidence of it holding a support. The November low of 6,521 is likely more important, but as we continue to see further downside risk, and we would think a move towards 6,000 has now a decent probability of taking place. It's ugly. It's ugly to say the least. And unfortunately, I think most people are of the perspective of this could have been avoided if we didn't actually go into Iran. But we did. And as a result, whatever miscalculations took place, not from a political perspective. I'm speaking more purely from an economic perspective. If you want to say the politics of it justifies the oil prices going up, then that, it is what it is. But at the end of the day, the stock market is apolitical. They just know that if oil prices go up, they're not necessarily going to be able to react in the easiest of ways. And I also think the markets have been kind of staying stable because they felt there would be a taco coming in every time Trump has done something kind of crazy. The markets are like, well, eventually he'll retreat. We just experienced it in February with Greenland and the whole tariff stuff. And this one, he's tried. He really has tried to retreat, given his comments. Unfortunately, you can't. It's a little tough to get out of a war like this. And, now that the Israelis are, in the words of Trump, going rogue, how they're attacking these oil fields, that's also not creating the easiest way for the administration to navigate it. And then to put it all together, you had Joe Kent, who is the former director of the National Counterterrorism Institute in the United States. He was the highest ranking official to officially get out of the administration. He went on Tucker Carlson yesterday, and this guy, I did some research into this guy. This guy is MAGA all the way. I mean, just to give a little bit of context to people, this guy who just left, the highest ranking official to leave the Trump administration in his second term, was like defending January 6th protesters and their right to storm the Capitol. Like, this is not an anti-Trump guy. This is a guy who is ready to defend Donald Trump. For him to go on Carlson and spend 3 hours, and now he's getting accused of being a traitor and all this stuff, to say that Iran did not have a real threat against the United States and we went here for no reason, it's kind of crazy. It is kind of crazy. So here's a couple of things he said yesterday, which is also getting the market to believe that Trump went rogue here and did this by himself without any real justification.
The Iranian strategy, it's actually pretty pragmatic. The Iranians are obviously aware of what's taking place in their region, and their strategy was to not completely abandon their nuclear program, because they saw what happened to Muammar Gaddafi in Libya when he said, hey, I've got no more nukes. I'll do what you say. I'll give up my nukes.
And then we gave him the Nobel Peace Prize.
Yeah, we regime changed him, and he was executed by his own people in the most horrific way.
Sodomized by a bayonet. Right. Okay. So that's that's the lesson I think that the entire region took from that when Hillary Clinton.
Unfortunately, that is what the neocon, neoliberal warmongers, that's the lesson that they showed everyone in the region. So we knew each other. And the last time I saw Charlie Kirk on this earth was in June in the West Wing, in the stairway. And I said hi to him, and he looked me in the eye, and he said very loudly, and it's a small, you've been in the West Wing, it's small, it's a tight space. And he said, Joe, stop us from getting into a war with Iran. very loudly.
He was single-minded.
And he walked off and he went, I believe, into the Oval. So when one of President Trump's closest advisors, who is vocally advocating for us to not go to war with Iran and for us to rethink at least our relationship with the Israelis, and then he's suddenly publicly assassinated and we're not allowed to ask any questions about that. It's a data point. It's a data point that we need to look into.
I mean, guys, this is crazy. This is not some random conspiracy theorist lunatic who just went on Tucker Carlson's podcast. This was the guy appointed by Trump to run the counterterrorism efforts of America. Iran is the biggest state proxy or state sponsor for terrorism. And he's leaving and he's implying that he's not implying, he's explicitly saying it. He's saying the only reason we went into this war is because the Israelis convinced Trump to go into this war. He goes on to say, it's a 3-hour podcast. I listened to about 50 minutes of it yesterday. He goes on to say that he was stopped from investigating what happened to Charlie Kirk. And he makes the argument that Charlie Kirk explicitly tried to get him to tell the president that we should not go to war with Iran. And then 2, he said there was no imminent threat to nuclear weapons that Iran had. He said, yes, Iran was obviously trying to give the perception as they were that they were enriching nukes because, they didn't want their entire regime to be changed. They didn't want to happen what's happening to them right now. But they were not actually going to use a nuke. They were not going to create a nuke. And there was zero intelligence to imply that we had to go in as aggressively as we did to stop them from getting a nuclear weapon. Now, could you not believe him? Sure, right? Everyone's going to have their own perspective on this. But the fact that he's leaving the administration, the fact that he is diehard MAGA and he's going against Trump in this manner, I think this is another reason the markets are just like, hey, maybe there's something else going on about this war that we don't know. And when you have one of Trump's senior directors leave and start to make the argument that this war is pointless, maybe, this is not exactly a war we should have got into. And maybe it's not an easy war for Trump to get out of. Here's what Trump had to say about this as well.
Well, I read his statement. I always thought he was a nice guy, but I always thought he was weak on security, very weak on security. I didn't know him well, but I thought he seemed like a pretty nice guy. But when I read his statement, I realized that it's a good thing that he's out, because he said that Iran was not a threat. Iran was a threat. Every country realized what a threat Iran was. The question is whether or not they wanted to do something about it.
So look, the reason this is really important to analyze, and I know everyone's going to have their own political beliefs, and it's very hard for people to step out of their own political ecosystem or political ideology just to look at this objectively. The reason this is important to analyze is because markets are down. Why are markets down? The reason markets are down is because oil prices are up and the perception of this war, it's not down because of Micron earnings. I'll tell you that. Micron down 8%. Micron had some of the best earnings we've ever seen. It's down because when you start putting the pieces to the puzzle together around how the market is perceiving this war, you have administration officials saying we didn't need to do this. And then you have proxies continuing to fight and attack oil refineries. The entire market, I think, is just coming together and saying, okay, this might be lasting a lot longer than we thought it was going to last. We have a lot more data points now of people in the administration, or I guess ex-officials from the administration, coming out and telling us there was no need for this to happen. And I think the market's genuinely reacting to these new data points, and they're basically fading every comment that Trump says about this war ending soon, because now they're thinking, wait, if his own officials are leaving the administration because they don't want to participate in this war that they don't think ever should have happened, then obviously the market's implying that, yeah, this war is probably going to last a lot longer than what we think. And, whether you disagree with the politics of this all, whether you disagree or agree with Joe Kent, it's another point of data that's very, very important to analyze. And given today is like the first actual red day we're having, meaningfully to the downside, that seems like it's based on the oil headlines. I think that's how it's kind of coming together right here. So we got the market open in 30 seconds. We'll see how this opens up. Maybe this move gets faded. I'll do the red or green poll in the chat, but yesterday's news updates were pretty intense. Not only did Trump admit that Israel is kind of acting on their own and he's not happy about it, but you have senior level officials that are leaving the administration based on the idea that this was not supposed to take place. And whether you agree or disagree with that, the market is definitely not happy about it. And we're seeing the most violent price action we've seen. Silver down 12%, gold down 7%, S&P down 1%. In the past couple weeks. 9:30 a.m. Thursday, March 19th. The stock market is now open. All right, wake your asses up. S&P 655, we are down 0.87%. 0.87% as we open up on the day, 0.9%. It looks like we are headed lower. Let's see if we crack down 1% for the day. Google is down 2%. NVIDIA is down 2%. OSS down 4%. Red Cat's down 7%. Broadcom's down 2%. SanDisk down 8%. Where is Micron? It is down almost 9% on the day. Micron's PEG ratio is like now 0.15, which is kind of insane for the growth they put up. Again, we'll talk about more of their numbers, but unfortunately the numbers do not matter on a day like this. That's down 7%. Anyone who chased Micron yesterday or memory in general, you're just getting hit with a pretty ugly candle. Maybe it's the best buying opportunity of the year, or maybe the memory names are going to take a real breather. Nebius is down 3%. Meta's down 1%. Rocket Lab's down 2%. Reddit's down 3%. Robinhood potentially going below 70, 71.90 right here, down 4% on the day. Grab is down 1%. Next Decade is up 2%. Next Decade was up 14% yesterday as well, as natural gas prices continue to go higher. IGV and software, that is red, down 0.46%. Uber slightly green. Coherence down 5%. Orbs is down 4%. Qualcomm down 1%. They also started doing a buyback this week. Weeble's down 3.4%. Adobe is somehow green, and so is Salesforce, very slightly green, but you're getting a little bit of green action on those software names. I wonder if this is just a free fall throughout the day, or if we do put in a bottom relatively soon, because this is enough pain for the market to kind of price in and have multiples compress, or, are we legit going to see a nice little correction here and see some pain? Palantir holding 150 is not that bad, right? Like, we're not really giving up many key levels on certain names. S&P, little green candle right there, 656 from 655, but obviously still down on the day. Or do we have to go lower? That is the question. Do we have to go lower here, or is some of this pain enough? And again, I think the headlines from yesterday are also impacting the market's perception of inflation. For those that were watching the JPOW conference yesterday, he was pretty stern on the idea that energy inflation is something they didn't expect. And now the reason it was an 11-1 vote to hold rates and not cut them is because they are now factoring in that if PPI was as bad as it was before energy, well, PPI in April after March's energy, which if it doesn't come down in April, I mean, we are going to be looking at 4% PPI, which probably is going to get us to at least 3% CPI. And it's not going to be pretty. It is just not going to be pretty. Micron down 8% right here. AAOI is down 3%. NVIDIA losing the 179s. We're now at 176 on NVIDIA. 176 on NVIDIA. The only thing that should be printing today are covered calls across the entire portfolio, but obviously it might not be fully remedying the extent of the damage. Nubank, is that getting hit? The international stocks are down because the Dixie, wow, Nubank below 14. Dixie is 99.97. Gold and silver, I just, I did not expect them to have this tight. I mean, gold basically lost. We're looking at almost $1 trillion of value. Silver, about 400 billion. Silver down 11.6, gold down 6% in general. Fear and greed is 15. Yesterday it was 20. I asked a question on X, does it feel like extreme fear? And I mean, now today maybe it does. The website's not even loading to show the fear and greed. Look at that. Okay, there it is. I was like, imagine it just doesn't load. It's just like, hey, there is no fear, there is no greed anymore. It is what it is. 15. I mean, it does feel like it a little bit today. Yesterday, it didn't really feel, I know we were down 1% yesterday, but today you're actually starting to see like the nasty 7-8% drops across the board. NVIDIA might lose 176 right here, 30 cents away from losing 176. Raytheon's down 1.2%. Where is Netflix? That is actually green a little bit, 94.80. That's also getting hit. Copper should be down as well. Copper, yeah, COPEX is down 7%. That's the copper miner ETF. Copper spot, I think, is below $3, right? Sorry, 536. 530. It touched almost below 5 this morning, but 536. So that's why the miners are obviously not doing the best. Dutch airline KLM cancels flights to Riyadh and Dubai until May 17th. Dude, I feel so bad for Dubai. I think people have seen, I think we showed it on the show a couple days ago, the real estate prices in Dubai are falling off a cliff. I mean, Dubai is the place where you're supposed to go when you have a lot of money and you don't want to pay state income tax or countrywide tax. There's no capital gains tax. A lot of crypto people go there. It's great for tourism. It's sort of a luxurious lifestyle. And, if you're worried about missiles flying over your head, you're not going to go to Dubai. So like the entire tourism of the Middle East, at least for the foreseeable future, is wrecked. I mean, guys, this is so bad. Like, this is just not good. Oil is spiking. Middle East proxy wars are breaking out. Refineries in Saudi Arabia and Iraq are getting hit every single day. We just lost 176 on Nvidia. There doesn't seem like there's an end to this war. The UAE has to be pissed off about all of this. Like, this is so bad. It's just not good. Now, does that mean sell all your stocks and go to cash? Again, at the end of the day, I don't think that is the strategy. That's not what I'm doing here. I've been very explicit. My strategy is aggressive covered calls and at least try to generate some income, because at the end of the day, Trump is unpredictable. And if he says, all right, the war is over because the Dow falls another 300 points and he just can't take it anymore, then I think markets rally, we flip, oil comes down. And, we've seen this story play out so many times. But this is the worst of the Trump fiascos we've been in over the past 2 years. It's worse than Liberation Day. It's worse than the Greenland stuff. It's worse than the tariffs, because this is like, people are dying. B, you can't easily get out of this situation. There's too many variables here, no matter how much you say you can get out of this situation. And, unfortunately, that's why we're here. And that is not a political statement. Whether you agree or disagree with the war, I don't care about it. And I'm not interested in convincing people how to think about the war. I'm saying the economic implications of this, regardless of your politics on it, it's bad. It's just like not good. And as a result, we're seeing the market price that in. Bitcoin right here below 70. Bitcoin below 70. Wow, Tesla 380. Tesla 380. Tesla down 3% here, as this one is also getting hit. The Strait of Hormuz is definitely not open either. There's been so much reporting about how, Trump is going to get all these NATO allies to come with him to help open up the strait. But we talked about it yesterday. There's a ton of NATO allies that came out and said, this is not our war. And we're not sending our ships to help open the strait. And that's why Trump had that tweet yesterday that we covered, where he got pissed off at the NATO allies. And he was like, you know what? We don't even need them in the first place. So it's like even the Frances and Germanys and the UKs of the world, they're helping, but they're not like explicitly like, yeah. Even the German chancellor the other day, Merz, came out and said, this is not our war, after sitting with Trump when the war broke out and kind of agreeing with some of his stuff, because politically it's kind of tough to support it, especially if the people of your country don't support it. And so they're trying to, watch out for themselves. And as a result, I think Trump is just starting to feel a bit more isolated in terms of how this is playing out. AppLovin, that's down 4%. Trade Desk is down 1%. Robinhood down 3%. Gold is down 5%. Let's talk about Micron real quick and why this stock being down 7% is very, very surprising. Micron put up some of the best earnings we have ever seen. People are really comparing it to NVIDIA's quarter back in May of 2023, when every expectation was hit out of the water. EPS 12.20 versus 8.79 expected. 40% beat. Revenue $23.8 billion versus $19 billion expected. Guidance, the street wanted $10.05 for the next quarter. Micron said we're going to do $19. The street wanted $22 billion of revenue for Q3. Micron said we're going to do $34 billion, and they're probably going to beat those numbers as well. I mean, we are talking about beats in the memory space on a order of magnitude that we've only ever seen from one other company in the entire stock market, and that was NVIDIA back in early 2023, when there was a structural problem with how the street and the analysts were valuing and understanding NVIDIA's business, because they just could not comprehend the level of growth NVIDIA was about to put up. And I think the same thing is happening in memory right now. The only problem is, once again, that narrative of cyclicality is staining Micron right here. Although I think, based on these numbers, guys, and this is my raw opinion, just based on like looking at them last night, it feels like Micron's going to go higher regardless. I know it's down today. The whole market's down today. It feels like it's going to go up. Because if the cycle is lasting until 2030, which is kind of the sentiment now based on these earnings, I mean, you've got a good 4 years of this playing out. A run to $700, $800 does not seem crazy. With these growth metrics, that would still be cheap for Micron if they are able to accelerate this type of growth going into the end of the year. And so I don't know if it's a buy, but the sell-off to me feels more systemic about algorithms in the market selling off everything versus them targeting memory. Maybe there's something deeper around why Micron in particular is down 6% along with SanDisk and Western Digital, but it definitely feels like it's not going to be stuck there for forever. Bitcoin right here, 69.3, another risk on asset getting hit pretty hard. The private credit names are getting it. SoFi below 17, AMD below 195, Amcor below 46, Lumentum and Coherent also getting hit. CoreWeave down 3%, potentially below 80 right here. Rivian, are we green on Rivian? Rivian somehow goes green on the day. I don't know what the headline is on Rivian. That's up 8%. Kind of weird, but that's up. Intuit's also up 3%. Silver still getting wrecked. Did Rivian get a price target? Oh, Rivian partnered with Uber to deploy up to 50,000 robotaxis in Miami and San Francisco by 2028. Uber will invest $1.25 billion in Rivian through 2031. Wow. Uber giving Rivian $1 billion to deploy 50,000 autonomous robotaxis on their platform. I guess Rivian robotaxis by 2031. I mean, the question is, can Rivian even operate robotaxis, and do they have the tech to be able to make that take place? Uber obviously makes sense. They're securing supply. That's what Uber has to do. But yeah, Rivian's getting $1 billion. I guess the stock should be up 8% right there on the day for Rivian. Baba, yeah, what the hell happened to Baba? I saw their earnings this morning, and I mean, I know why the stock's down 9% because they had a crappy earnings, but I'm like, why do they have such bad earnings? This is Alibaba. They should be doing okay. They missed by 36% on EPS, $1 versus $1.50. And then revenue, they missed by 3%, 40 billion versus 42. Like, I don't get why Baba had such a bad earnings, but that stock down 9%, probably deservedly given if all these AI names are down after putting up amazing earnings. Baba can't be having crappy earnings. Micron still down 5%. NVIDIA still down 2.3%. Google down 1%. And the S&P still at 657. Yeah, you're the Rivian deal with Uber. Didn't Uber do this with Tesla? I think, there were attempts, I think, for Uber to try to aggregate the Tesla robotaxis underneath their network. At the end of the day, if Uber gets all the value from being the aggregator, it'll be a decent strategy. I just wonder if, people will just go directly to the source like a Tesla over the aggregator of an Uber. But that's also, Tesla has to actually ramp up these robotaxis at scale, and that's just not happening yet, right? Which is why I think the market's not fully pricing that in. Now, if Tesla does, that's a different question, but right now, you do not have a lot of Tesla robotaxis on the road yet. Visa 301.96. And also that might be because the tech is not there yet. Although I think FSD is amazing. To have it fully unsupervised, that might take a little bit more time. Maybe we're putting in a little bit of a bottom in the morning. You're seeing a lot of green candles pop up, which are kind of encouraging. Palantir just went green. Software just went green on the day. IGV, Salesforce, Adobe, Intuit. Obviously, it's only 13 minutes into the market open. So, we've been through this game before. S&P 657, that's the best we've seen in the past 20 minutes. Gold is just getting wrecked now. 451. I'm going to try to see if there's some more specific gold headlines, but I think it's got to be the war continuing is leading to the market to be upset about what could potentially happening in the broader commodity space. Qatar Energy CEO told Reuters that the Iran attack knocked out 17% of Qatar's LNG capacity for 3 to 5 years. Goodness gracious. This represents $20 billion in annual revenue. So if it's 5 years, it's $100 billion of revenue based on 3 damaged facilities. Dude, this is not good. Like, this is just like, there's no sugarcoating this. This is not good. And if your politics dictate that this war is good, then you are making the conscious decision to say the impact of the war outweighs the impact of LNG and oil and all that stuff. And that's fine. That, you're totally allowed to do that. But if you're doing the opposite, then you're making a different prerogative, which the market obviously is doing the opposite because they don't give a shit about the politics of the war. They care about the implications of all that lost revenue and what that means for the stock market. And the market's saying, hey, it's not worth it. We'd rather be in cash than buy some of these assets, or we'd rather buy VG in next decade and assets that can benefit off this stuff. VG up 4% on the day, versus super high beta growth. And all of this affects growth stocks at the end of the day, not just because the price of oil is intertwined with the extent of the economy functioning, but because if oil is up and inflation goes up and sustains itself being up, it goes back to 2024 where every single show is about, can we fight back inflation? Because the inevitable byproduct of getting inflation to come down, red cat down 10%, is we finally get our rate cuts. But if we don't get our rate cuts, growth stocks, they just have a harder environment to exist in. It's just tougher. And these companies are not the same companies they were back in 2022 when we were raising rates and they just started inflecting on their earnings growth. These companies have now matured. They are, have a lot more billions of market cap attached to them. So they can't just go up even if rates are going up because they're small companies. Like, no, these companies have to put up really good earnings and they need a good macro environment for the street to actually allocate capital to them, especially your high beta names that already have a premium. If you want them to extend that premium, you're going to need rates to come down, which is why Verizon and Coke are up on the day. You're seeing the value stocks catch a bid. Yeah, SPY is below the 200-day moving average. That is correct. And that's why you had a lot of the sell side come out and say that, like, now we think we're just going lower. Which, again, I think once Trump ends the war, that is your buy. I mean, this still is your buying opportunity because eventually this thing has got to come to an end. I am of the mindset that, Trump's going to let the S&P go down to 4,000? Like, he's going to let the Dow go down to 30,000? Like, maybe he does, but eventually he says, all right, we're done. We're leaving. It's just going to be hard to do it soon, in his words. And I think markets rally once that's done. But how long is that going to take? When does that happen? How many forces are involved? How much oil has been wrecked for the next 4 or 5 years, even if he does do that, where oil prices are still not going to stabilize? It has just become a very, very dicey situation. And again, we still don't have a regime change in Iran, which was the stated goal of this entire mission. So, there was another headline last night that was also really important. This is another thing that I think freaked out the pre-markets, and it was unfortunately about troops on the ground. So this was Washington Post and Reuters. The Pentagon is requesting $200 billion from the White House to fund the war in Iran. The White House is considering thousands of troop deployments to secure Iran's coastal line to reopen the Strait of Hormuz. So they're not talking about boots on the ground to topple the regime, but they are talking about boots on the ground to be able to secure the Strait of Hormuz, because obviously that would help oil prices. I think that also freaked out the markets because they're like, all right, well, that's one step closer to legit boots on the ground. And that's not something that the market necessarily wants to see. Fear and greed at 17. Fear and greed at 17, just above 15. But that is still red. Let's talk about the new Spider-Man movie. First of all, why do we keep having new Spider-Man movies? I thought it ended in 2007 with Spider-Man 3. Okay, I don't know why we keep having these new Spider-Man movies, but no one's going to be able to afford to go watch a Spider-Man movie if oil prices. Last time I checked, you need to drive to the movie theater. And oil is expensive. $176.56 on NVIDIA. $176.56. This is just, every headline we've been seeing is around escalation, not de-escalation. And that's the other reason the markets are like, we just don't trust Trump. Every time he says we're actually going to de-escalate. Pete Hegseth was asked about how this war is playing out. This is what he had to say this morning.
The Gateway Pundit. So with the strike yesterday on South Bar's gas field, if the U.S. didn't know about it or didn't approve of it, it kind of seems like a trend of Israel apparently pursuing their own objectives over U.S. objectives. I'm not sure if you agree with that, but the president has said he doesn't want to hit Iran's oil infrastructure right now. As you said, the U.S. avoided this on Park Island. Oil's nearing $120. Why are we helping Israel prosecute this war if they're going to pursue their own objectives?
We hold the cards. We have objectives. Those objectives are clear. We have allies pursuing objectives as well. And the truth speaks for itself. I mean, President Trump was very clear about that. Iran has weaponized energy for decades. Israel clearly sent a warning, and POTUS has made it clear, very clear. Iran knows when you hit Karg Island and you hit military capabilities on Karg Island, which is the only thing we hit, we can hold anything at issue, anything.
Okay, so Hexeth once again trying to convince everybody that it is the United States that is calling the shots right here. NVIDIA continuing to get some downside momentum. I just don't know how much the market's going to believe him here. And obviously you're seeing, based on the red action, the market's not really believing him. Broadcom's down 2%, Meta down 1%. Nebius actually flips green. It's nice to see, 118. Let's see if CoreWeave and Iren can follow. Iren is down 3% right here. And then CoreWeave is down 2%. Nebius, you know, the fact that they're diverging from CoreWeave and Iren, I mean, until you get a monster deal from Iren, Nebius is starting to really show they are the neo cloud that people should be thinking about seriously. You had Jensen at their booth yesterday saying Nebius is going to help you with everything. I mean, Nebius ads are all over GTC. They are starting to stand out, I think, from the neo clouds as like the premier one. Obviously, you know, Iren has a lot of power capacity, but if that doesn't translate to a deal, then you might just have more inflows go into other different neo clouds that are out there. Robinhood 73.51, that's still down 1%. AMD back above 195, but still down 2% on the day. Micron as well, that one's still not really recovering. It's up from 420 though. It did have that flash hit to 420, now at 430. But still down from 450. The VIX is dumping. Yeah, I'm seeing more green candles pop up, which would make sense that the VIX is getting hit. VIX is, well, VIX was at 27, now it's at 26. So yes, that is a decline. Still up 3% on the day. If this thing can actually get to below 25, maybe we're in the clear, at least in the short term. But right now, we don't see that. Tesla 383. That's down 2.3% as well. Amit, this just feels like a lot of doom. Well, no, I think it's really important to understand the difference between doom and like also being practical about what's happening right here. There has to be a reason for why stocks are going down. And I think one of the most frustrating things in January when things were going down towards the end of the month is there was no reason, right? So people were just annoyed by the fact that stocks were taking a breather, even though multiples were reasonable and there wasn't really a catalyst to point to. Now you have a catalyst to point to, and the catalyst is quite obvious, which is oil prices have gone crazy because of a war. And as a result, we have to be practical about what that means for the implications of PPI, for the implications of interest rates, and for the implications of the stock market. Now, does that mean you sell everything? No, and that's not what I'm doing either. And, you know, we've talked about strategies like selling aggressive covered calls and potentially rotating into different sectors that can hedge against that. The problem is rotating into different sectors that can hedge against that could end up biting you in the ass if, once again, if we want to be more optimistic and not doomeristic, Trump pivots and he says, screw it, we're ending the war. We've done victory. We've hit all their nuclear sites and we're getting out of the region. We're moving on. And that's when I think your VGs, your next decades, your Chevrons, your Exxons, they're going to be priced in as not having the level of growth that they were perceived to have because prices should stabilize, even if it takes a while. And that's when you want to be long Meta and NVIDIA and Amazon and AppLovin and Reddit and not the safe place. But if this continues, which again, this is why this is so tricky to understand. It's not being doomeristic to say, hey, this could continue. It's we're looking at the evidence in front of us, seeing senior officials of the Trump administration leaving and then publicly saying how much they disagree with the war, given how supportive they were of the administration. It is crazy to see the 180. And then you're seeing other administration officials not really have the best justification to explain the Trump war. JD Vance was asked about it yesterday and he was stumbling all over his words and he couldn't, you know, because he's probably thinking of his presidential future and his political future. And he's thinking, man, I don't want to know if I want to be that tied to this war if it doesn't go the right way. So he's kind of distancing himself as well from it. You're starting to see a lot of different cracks in the narrative of the war. And that's where the market's saying, okay, we don't care about the politics of the war being good or bad. We just care about if it's going to end soon. And if we're not getting direct confirmation that it's going to end soon, then yeah, we have to start pricing in these growth stocks potentially taking a hit, which is what we're seeing today. It's what we saw yesterday. It's what we're seeing in gold and silver. And we might get some bounces here and there, but at the end of the day, if we're stuck in this range, I think that's the best thing we could get, being stuck in the range versus having a complete breakdown. But I do think you have to be ready for that breakdown. It's just, once again, the market also thinks Trump will pivot. And maybe if things get ugly enough, Trump pivots pretty quick. But if not, then, you know, we are stuck in this ecosystem. ASTS down below 90 as well as that one goes red. And once again, let me say this to be explicitly clear. I have to say this every time, but I feel like people don't believe me. I don't care about politics. I don't care about influencing you to think in a political way. I don't wake up every morning thinking, oh, I'm going to get people to think in this way. I don't care. I genuinely don't. I care about analyzing all of the new different variables we get, and those variables come together to form a story about price action. So when a senior official leaves the Trump administration, who is one of the most diehard MAGA people, and starts criticizing them publicly, like, that's a piece of data you have to look at. Whether you believe him or not, that's a piece of data the market's going to be interpreting. And same thing about why we read Trump's tweets all the time. Like, for those that love Trump, you might love his tweets. For those that hate Trump, you might hate his tweets. But the point is, his tweets are important because they have an impact on the market. And based on what he tweeted yesterday about throwing Israel under the bus, that's just something the market cannot ignore. And I think the market's realizing this war is going to last longer because now we have an ally that is doing stuff without our permission. And whether we like it or not, if we're responsible for that, that is going to also affect oil prices. Redwire, that's down 3%. ASTS down 1%. Lunar's down 7%. All the space names starting to take a hit. Rocket Lab slightly going green right there at 69.50. But the rest of these space names now going red. Gold 4,600 from 4,500, 4,590, still down 6%. So the lows today was just below 4,560. You're now 4,590. Silver was down 12%. Now it's down 11%. So silver not really recovering, but maybe the absolute bottom today could have been put in. It does seem like on equities as well, VIX is still 2587. We're not really seeing a decline on the VIX in a way that would make you meaningfully think the S&P could go green, but we are at 658, up from 655, which potentially means we could go green. Amit, where's the link to sign up for the Chicago meetup? Let me put it in the chat for everybody. That Chicago meetup is happening May 9th, and LA is happening March 28th, which is next week. So I'll put that right there in the chat. S&P 658, SLV's at 63. Wired defense stocks down. Well, they're not all down, right? Palantir is basically flat. Raytheon's down 3. Wow. You would think Raytheon and Lockheed would get a bid today, or at least not be down. Lockheed's also down 3. That's actually kind of bullish if the defense stocks are down. Because maybe the market's like, all right, this war is going to end soon. But then Palantir's not really down. I guess maybe software's up. That's hedging against it. The VIX is spiking again, back to 26. We were at 2580. That's weird. You would think the defense stocks would at least not be down. Most of their stuff is useless in this war. Well, you did have Anduril get a $20 billion contract, so maybe you're right. That $20 billion did not go to freaking Lockheed or Raytheon in that same way. Are you headed back home today? Yes, I'll be getting back home. I'm going to be getting to Jersey early tomorrow morning. It's a red eye, but most likely we'll still be able to do the market open because I'll be getting back a couple hours before the market opens. So Friday market open, we should be good to go. NVIDIA 177.50. That's down 1.6, but it's up from 175. And then Reddit still down 1. S&P trying to get the breakout for 658. I closed out my Lockheed position yesterday. Well, not bad timing. Not bad timing. SoFi. Okay, so the short report on SoFi was really bad. We all know that. Unfortunately, the market doesn't care, and they are continuing to treat SoFi as if they have the worst credit on the planet, which I don't know what we can do about this anymore. The ECB president is live. Let's see what she's saying right now.
Russia's unjustified war against Ukraine remain a major source of uncertainty. By contrast, growth could turn out to be higher if the economic repercussions of the war in the Middle East proved to be more short-lived than currently expected. In addition, planned defense and infrastructure spending, reforms to enhance productivity, and euro area firms adopting new technologies may drive up growth by more than expected.
The main headlines right here from this speech, she's been talking for about 20 minutes, is around growth to the downside, potentially based on this idea of higher energy prices. Obviously, Europe is very reliant on Russia for their energy, which, you know, Russia's been milking this and making a ton of money off this. And unfortunately, you know, not the best for the Europeans. The problem here, whenever we get a bounce as well, is that most of these bounces are just seen as the chop. And what is the chop? The chop is, again, this up and down range that we've been stuck in for the past like month now at this point. And every time you see a bounce go up, you look at the headline, and maybe the headline is something around the war coming to an end. But then, you know, you actually look at the reality of what's happening, and then you know that bounce probably gets faded, and it's happened every single time. This time it's happening near the 200-day moving average. And that's why it's a bit scarier to people. And that's why, you know, some of the sell side is getting a bit more like, okay, if we lose that average and we stay below that average, we have to pontificate around a world in which we legit go down. But, you know, right now we're just teetering around that area. 4.265 on the 10-year as well. The 10-year is not getting any help from this thing moving to a different direction. Oracle, is that making a move? Oracle is up 1.3. All right, so Oracle gets a green candle. Some of the neo clouds are getting green candles. So maybe the data center part of the market is catching a little bit of a bid. Again, there was a ton of updates throughout GTC, and NVIDIA continues to say that they are going to continue executing, and the cycle is not going to stop anytime soon. The market obviously does not fully believe them yet either, but if the war were to end and, you know, the market could actually price in everything Jensen's saying, that could also be a massive catalyst for the market, which is why I don't think you sell your stocks. Because look, at the end of the day, if you believe the market's going to fall 20% from here, you know, and you really want to reposition, you probably trim a lot of the fat. If you don't think that crackdown happens, I don't know if you trim the fat just for a 5% drawdown, because that's just inevitable. You have to deal with that. But obviously, if you knew there was going to be a very, very big correction, everyone would want to trim a little bit. I just don't know if we fully get there yet. Again, the unpredictability of Trump and his willingness to accommodate when things go bad, which he's done many, many times. It's just this one is the hardest one to accommodate to because it's a full-on war. It does feel like that still has a chance of happening. We just don't know when, where, or how that's going to take place. Do we have some macro data? I think we have new home sales. I think we get jolts today as well, if I'm not wrong. Let's pull up the new home sales. See what we've got here. All right, let's pull this up.
The month before it was 745,000. This again is January because the data is still delayed 1 month. Inventory jumped to a 9.7 month supply from a 7.6 month supply. The home price was $400,500, down 4% year over year. Now, it's important to note that these contracts were signed in January. That's how the count is done. So it's people out shopping when mortgage rates were actually lower than they are today. They were around 6%, bumped up to 6.2, but really in that 6 to 6.2% range. So it would not.
Sold 587,000 homes versus 745,000 expected. So that's a pretty big miss. Last time it was 722,000.
Not have been a mortgage rate issue. Mortgage rates are now much higher because of the war with Iran. So again, this drop in January, you could blame some of it on the weather, but that's just a huge, we don't see that kind of 17.5% drop month to month. And again, 11% year over year for new home sales. The only data we have on new home sales so far for February is actually mortgage applications to buy a new home, and they're less than 1% higher. So basically flat. So not looking for much improvement in February, but that, again, a huge miss at 587,000. Carl, back to you.
While we have you, I keep seeing this Redfin number that the number of cancellations or pending deals that don't close is high. Is that true?
Yeah, I mean, we've reported that before. It's cancellations are rising because people are just, it's on the buyer side, mostly on the buyer side, not necessarily on the seller side, but because the market is getting more competitive. That is, it's much more of a buyer's market right now because there's more inventory, prices are still high. And so you just have buyers in the driver's seat now, and some of them are canceling because they think, wait a minute, maybe I could get a better deal if prices start to come down a bit, or they're waiting for mortgage rates to come down. Because remember, as mortgage rates rise, some people are not qualifying for the loan that they thought they might have gotten maybe just a month ago. So they could be canceling deals on that as well.
Right. Diana.
I mean, it's just another problem in this market, the housing market, which there's no way in hell the housing market's going to open up if inflation stays high, because we're not going to cut rates. If we can't cut rates, mortgage rates are not going to come down. I mean, it's just one of those parts of the puzzle that's not really getting resolved here. One of Trump's biggest economic agendas this year was not getting rates to come down. Well, yes, getting rates, but also opening up the housing market. But the only way you get there is if you either build massive supply, which we're not doing. Micron are here now down 3.6, getting a recovery from 421, or we lower rates. And both of those things at this point is not easily happening. The Qatar Energy CEO says we may have to declare a force majeure on LNG contracts for up to 5 years, affecting Italy, Belgium, Korea, and China. Korea gets a lot of their LNG from that area, so that could definitely affect them a bit more. And a force majeure is a contractual clause for freeing parties from liability when uncontrollable events happen. So at this point, you've got these energy CEOs saying, you know what, we might have to cancel a lot of our deals at this point, which you can't blame them. Trump just tweeted. Okay, Trump literally just tweeted 7 different things. All of them are links to articles. The headlines of these articles: President Trump has prevented another Holocaust. That's the first one. The second one: the left is petrified that Trump will succeed in Iran and expose them as mind-twisted frauds. The third one: Britain had a meltdown when China hacked voter files, but U.S. intel kept it a secret in America. The next one, it's someone's Substack: passing the Save America Act is indispensable to preserve representative democracy. Okay, so he's just tweeting out a bunch of random links at this point. And then his last tweet is endorsing Michael Whatley, who is running for senator in North Carolina. Okay, that's those are all the Trump tweets. Literally, I think they just let out 15 of them. They all got tweeted within the last 5 minutes. And yeah, no actual tweet about the war yet, but just a bunch of links. VG, look at that, $16. It's down from 1680 because oil took a little bit of a dip. Crude is at 96. It was at 98, but you're still seeing that being elevated on the day. That's his assistant trying to be efficient. Yeah, it seems so. Next decade, again, that one's moving. It took a war to get both Next and VG to move, but it's happening. I mean, it literally took a war to get these two stocks to move, but there it is. If you wanted to profit from what's going on, I mean, these have been two proxies to be in that are benefiting from it. The question is, if the war continues, do they sustain their pump? Or, if prices stabilize, do they come back down? And again, we saw VG go from 15 to 10 like 5 times over the past 2 weeks. Maybe the market's giving it a premium now because they're like, no, this thing's not ending anytime soon. And even if it does end soon, the level of damage that has happened to these LNG facilities, as we've been talking about with Qatar, means that we have to price in that we're going to need more supply. And that's where Next and VG come in, and we can't disregard it. So maybe these end up being really good hedges for the rest of the year if this continues. We had Besant on this morning. Let me pull him up. He was on Fox, and he was talking about what they may be thinking to do with Iranian oil. We'll see if we get some other macro data coming up as well. Also, Tulsi Gabbard is testifying in front of Congress. She's getting grilled about this war. Again, there's a lot of controversy around her because she was seen as, one of the more anti-war people, and now she is justifying the war. So, the market's trying to figure out exactly where that stance is coming from. Here is Besant this morning about oil.
We had a break the glass plan across the administration and at Treasury. We unsanctioned Russian oil. We knew that there were about 130 million barrels on the water, and we created supply that is beyond the Straits of Hormuz. So we anticipated this. We knew that there could be a temporary, and I want to emphasize temporary, choke point there. And there was 130 million barrels of floating storage. In the coming days, we may unsanction the Iranian oil that's on the water. It's about 140 million barrels. So depending on how you count it, that's 10 days to 2 weeks of supply that the Iranians had been pushing out. That would have all gone to China. In essence, we will be using the Iranian barrels against the Iranians to keep the price down for the next 10 or 14 days as we continue this campaign.
So, look, even if Besant is right about that, in his words, it's 10 to 14 days of supply. It's, I don't know if that's going to be enough, but it is a little bit more supply, which at least is somewhat that could potentially aid if they get rid of that unsanctioned Iranian oil. Another headline, Vance plus other senior officials are meeting with the American oil industry today, later on during the day at the API HQ. Not going to be at the White House. All right, so but Vance, I don't know if Trump's going to be in that meeting. I imagine he won't be, but Vance and other senior officials will be meeting with different oil executives. S&P 659, let's see if she can make a run to actually go a little green right here. The VIX has to be getting hit. VIX is now down only up 1%, so VIX potentially going below 25. Once again, this is a story that we've seen pretty much for the past month and a half now, where deep red open, we flip green because this market is not ready enough to actually give you that 10, 15% down. And then we stay green a little bit, and then we go back red. That red is not as deep red as it was when the market opened, but it still ends up being either flat to red, or we have the opposite. You kind of flip it around. We go deep green pre-market, open, go red, and then we flip slightly green. So those two scenarios have played out more times than I can count at this point. Rocket Lab back above 70. Rocket Lab was down 11% yesterday after those dilution concerns. And at this point, this is, again, why I say the covered call is your friend here, because you don't go too low, you don't go too high, and you just milk the premiums. But we are seeing the VIX come down a little bit. And the VIX is trying to spike. Every time it gets down below 25, you get a spike back up. Now we're at 25.45. Seems like it wants. Wow, FICO's down another 5%. This freaking stock has also been a disaster all year. All year. Gold is still getting hit. That is correct. Gold is 46.45, still down 5%. Silver down 9%. They were down worse, but they are still down. I kind of do want the crash to 640 or 630 just to have it happen, because I feel like it would be so quick, but it would at least get it out of the system. And I think a lot of people agree, like, if we're going to go down, let's go down. Let's stay there for a week, and then let's move on. Because also that would cause Trump, when he sees the market actually go down, I think that's also going to cause him to be like, all right, enough is enough. We gotta move on. Like, he cares about the market. There's ample enough evidence to know how much he deeply cares about the market. And sometimes you need a real kick in the ass to just get motivated to remember, yeah, like, this is something we can't play around with. And it also feels like the market's just been toying with wanting to go down. So it's like, all right, let's go lower. Let's have it happen for a week. Let's move on. The risk is we go low and we never come back and like we stay there, which I just don't think in this market environment that's easily possible. Like, those dips, I think, get bought. We know that institutions have a lot of money. They've been raising cash like crazy. So if you give them a Micron at 300 or something, right, something crazy after those results, it's going to get bought. Like, it will get bought. But, do we get those juicy Liberation Day low types of prices again? I doubt it, but if it happens, maybe that's where you get the actual the pivot. Retail investors bought $70 billion in gold ETFs over the past year. Over the same time, institutional investors have sold $1 billion of gold ETF outflows, accelerating in late January after gold prices crashed about 20%. Silver ETFs are up $10 billion in retail purchases over the last year. So retail is also very heavily into the silver and gold trade, which, again, to me, that's why it's as speculative as it is. And, you know, the volatility of that has to be understood. Yeah, Micron dip is already being bought. Guys, those earnings were, again, they were the most insane earnings I've ever seen on a company outside of NVIDIA in the supply chain stack. Micron now down only 3%. I mean, even at 450, the peg is like 0.7 or something. It is unbelievable, the growth that they put up. I mean, just structurally, the street could not factor in the types of prices they were. And also, the other thing is, not only do they have 75% gross margins, they're guiding for 81% gross margins next quarter. Like, if this continues, Micron's going to $1 trillion. It's at 500 billion right now. It's just, again, the fear of the street waking up and saying there's not a supply gut anymore for memory, even though memory is still super important. And that narrative, like, immediately wipes out the thesis, which has happened many times in Micron's history. If you look at their stock chart, look at their revenues, it has happened before. It's also happened to NVIDIA. It's just, you know, NVIDIA is the king of this whole AI thing, so it shouldn't happen again as easily, which also implies it shouldn't happen to Micron as easily, right? So if you're a bull, like, you can't blame you for being bullish here. But I definitely wouldn't short Micron after those numbers. I mean, those numbers, it's very hard to see that type of growth in the stock market for a public company. And Micron was able to put that up. Reddit going red, 139 now, as that's below 140. Are you enjoying the heat in California? I brought a bunch of jackets because I thought Northern California would be kind of cold, and it's not. It is so hot in San Jose. But unfortunately, yeah, I thought it'd be colder. So I'm actually not enjoying the heat. I really didn't think it would be this hot. But New Jersey apparently was like snowing the other day, so we're going back to a lot of cold. So I guess I do like the heat over the cold. Circle, that's down 6 on the day. Visa, flat. AMD, down. And then Apollo, that one continues to go down. Do you think oil will reach 150? No, I think that's like pricing in way too much fear, at least on crude. The problem is, once again, I'm not like, I can only react to what I'm seeing. And what I'm seeing, which I'm sharing with you guys, these headlines every day are another facility, another organization, another country saying we're going to stop production. Our facilities have been hit, this, and that. You got Saudi Arabia, Iraq, Kuwait. There's another headline about Kuwait this morning that I saw. Let me pull that up as well. When you look at all these headlines, you're like, all right, it's not going down, at least not easily, even if it's not going up to 150. And 150 is a doomsday scenario, but it not going down is also pretty damn bad. Like, oil staying above 90 is not good. And as a result, I think that's just the reality of what we're dealing with right now. And I don't know if that's going to change anytime soon. Could it go back to 120? Yeah, I think 120 is very possible. 150 is just a little aggressive. Yes, fertilizer prices. That's another thing that's now been spiking up. And that's also an issue. What are you doing, Grab? I'm holding. Look, at this point, not only is every growth stock getting hit, if you're a growth stock that doesn't have a thematic catalyst, you're also getting hit. So at this point, you have to decide, is it worth holding Grab in the portfolio if you think there's other opportunities? And it might very well not be for a lot of people. And I think that's fair, just like it's not for a bunch of different stocks. Like, you know, Microsoft's dead. Microsoft's not going anywhere. As undervalued as I think it is, as undervalued as I think Grab is, if the thematic is not there, if the narrative is not there, if Micron can barely catch a bid after putting up the most insane earnings we've seen since NVIDIA, other companies that have lackluster performance, like a Microsoft, which is still pretty damn good performance, is just compared to Micron, it's, not in the same ballpark. These stocks are stuck. And that has been my kind of understanding of the market for the past month now, that if these stocks are stuck, the only way to benefit from the volatility is to play derivatives on them that allows you to generate yield. Or you have to completely pivot your portfolio into the themes that are working, but you're just taking more risk by doing that. Like when everyone's saying, well, what's the thing to get into? It's like, well, the thing to get into is oil, but the move happened. So now you're taking risk on the move continuing to happen. Like buying VG at 16, it's like, hey, this might go to 20, but for it to go to 20, some stuff needs to happen. And it might feel good that you're in the right thematic because you're like playing the war and you're like, you're on the right side. You're out of the Reddits of the world or the hoods of the world, and now you're in the VGs of the world. But VG was also $7 back in December, which we talked about, right? And I think a lot of us bought it almost as a little bit of a hedge as well, just in case things go up. We've seen the arbitration lawsuit gets resolved. Now for this thing to go to 2025 to get real alpha, if you're entering at 16, like and building a real position, it's just way more risk. And I don't know if the risk is worth the reward on rotating the portfolio. Whereas if you're in an Amazon, and as annoying as it's been to be stuck in Amazon or Microsoft or Grab or Hood all year, I feel like at this point, you run the covered call and you DCA on these names, as boring as that is, because if you rotate, you're just taking on additional. I mean, if you rotated into Micron yesterday at 465, you're not happy right now. You're just not, even though that stock should be $550. It just got upgraded, by the way, let me actually bring up the upgrades. I got a ton of upgrades this morning. I think the most notable one was 700 from JP Morgan. But like the rotation didn't work if you tried it yesterday, because we're in a really dicey market. A lot of these stocks have already gone up a lot, and this war is an overhang on growth in general. By the way, the VIX is spiking again. We're back at 26, folks. We were below 25 for about 5 minutes. We are back at 26. These are the Micron price targets. Cantor has them at 700. Barclays 675, Rosenblatt 600. So the average price target right here is about 570. Meaning, yeah, there's upside, but how much risk do you want to take for that upside? The only, okay, so, a lot of people have been asking, well, what would you sell here? I think the thing you sell, which is the same philosophy I had for the past couple months, you sell the thing that you are the most uncomfortable with holding in your portfolio, because either A, evaluation, or B, you don't see yourself actually developing a real position in it. So if you bought CoreWeave at 85 for the hell of it, because it's down from 120, and you're like, you know what, I want to get NeoCloud exposure, CoreWeave 85, 120 to 85, it's a reasonable dip. I'll buy some more if it goes down below 80. I'm going to hold this position, and I want some exposure. And now you're just like, dude, why did I buy this? Why do I care about CoreWeave? Like, do I even want to buy more now that it's $5 below my cost basis if I bought it at 85? If you're having those types of feelings and it's a substantial amount of money, then I think that's when you get rid of those, take the L, and put it into your high conviction stuff, because that will give you the ability, A, to load up more shares in the high conviction stuff, which means you could potentially run more calls on it and benefit from it. B, it just makes you feel more comfortable if the S&P were to get hit with a 10% decline, that you're holding something you really care about, like a Rocket Lab if you're super into that, or a Hood, or a Palantir, or an IREN if you're super into the NeoCloud names that you want to average into, versus a name that you bought for no reason. And so, even if there's an opportunity that's out there that seems like it makes sense, if you don't care about it, I found the toughest things to hold are the things that when things go bad, I don't know why I own it, and then I sell it at a worse loss than I could have sold it at, because there's no need to have it. So I feel like the volatility, this was, Stock Talk was talking about this yesterday as well. Like, he's going through a couple big drawdowns in some names that he's a fan of. And the reason he's not trimming them is because he genuinely believes in them. But if he didn't believe in them, remember, he had Zeta early on as well. He just didn't believe in it fully, and he got rid of it, took a loss, and moved on. I did the same with Copex. I ended up making a 10% profit here, but at some point I stopped believing in it. And if I had held on to it, forget it going down, I would have been mad at myself knowing that I was ready to get rid of it and my intuition was right, and I didn't actually believe in it. And now I'm losing money on it. So I think you double down on your winners and your highest conviction bets right here. I don't think you go and you chase the thing that's going to benefit from the war. Like, I think doing that, it could be strategic in the short term, but you've got to be right on the timing. You've got to be right on the ability to call, if this war is going to play out in the way you think it will. OSS had a great earnings as well. That's down 11% on the day because that's a small cap, but they had a phenomenal earnings, 70% growth. The guide was good as well. But yeah, that stock's going to get hit as a small cap, as that is down on the day at 9.95. See Tanner in the chat. How was GTC? GTC was awesome, Tanner. Unfortunately, NVIDIA nuked Tanner's stream. It's so annoying because, like, first of all, NVIDIA never takes down people's streams. But second of all, like, one of the main reasons I'm invested in NVIDIA is because of Tanner and him helping me understand the story. So it's like, this is like 50% of his net worth, and the company that he's been advocating for is like, yeah, you can't stream our biggest event of the year, which was a mistake, and they fixed it. But that was crazy that they ended up banning it. Look, I think GTC was great. The problem is there wasn't anything introduced that was so new and exciting to get the market to be like, oh my goodness, like we just have to give NVIDIA and all the semiconductor names a bid. The only update we got was that Nemo Claw thing, which is really cool. And I did an interview on that, and that'll come out later. And, we can talk about NVIDIA's approach to open source agent architecture in the enterprise. But then the second thing was that $1 trillion revenue target by Jensen, which the market didn't like because they thought that was actually lower than expected. And Jensen had to re-clarify his statements and say what that 1 trillion included and didn't include. Outside of that, GTC has been amazing, but there just hasn't been anything new. And who am I to say NVIDIA has to put out new stuff every couple months? But the market at this point is like, we need something more than the same robotics and Uber self-driving partnership you guys have been talking about for the past couple months, past couple years at this point with Uber. Meta 607, losing some steam right there. That's down 1.3%. Oh, we got to talk about the Meta headline, dude. So yesterday it went viral that Meta's getting rid of freaking Reality Labs. That's not true. Apparently that was fake news. They're getting rid of a section of Reality Labs, but they're not really getting rid of they're getting rid of like Horizon Worlds, but that's not the entirety of Reality Labs. Because if they were actually getting rid of the metaverse, I feel like the stock would be up 15%, 20%. They spend $80 billion, or they've spent $80 billion in the past couple of years. I think last year was like what, $9 billion or something per year that they're spending. I'm gonna see if I can get the updated figure, but they're spending a decent chunk of money on Reality Labs. They're not actually getting rid of it. Like legit saying we are completely shutting down all metaverse efforts. I mean, literally the event back in September that I streamed with Steve, when Zucks was showing off the glasses, they talked about the glasses will take you into the metaverse. So just a few months ago, they were talking about the metaverse. If they legit got rid of it, I think the stock would be up a lot more, but it doesn't seem like that's really taking place. S&P is going back down, 2645 on the VIX. We are spiking again. VIX was up 1%. Now it is up 5.4. Now it is up 5.4%. Hexeth wants Pentagon to dump Anthropic's Claude, but military users say it's not so easy. Yeah, we've seen a lot of those headlines as well about Claude being the best model in the DoD. And although they want to get rid of it, it is not the easiest for them to do that. Why is 1 trillion not exciting? Well, if you look at the FactSet numbers, the street had them at 978 billion. So when Jensen said, oh, we're going to do 1 trillion, the street was like, cool. Another 22 billion. We don't care, and I think Jensen got pretty mad about that. And then he had to clarify, I'm only talking about Blackwell and Rubin. I'm not just talking about everything else, but it was kind of fast, this high of an expectation, and then act like this as well. By the way, OpenAI, it looks like they're going to go public. Here's an update on that, shifting some of their strategy to focus on the enterprise to get public by 2026.
On the push toward their enterprise business and an IPO. What does it mean? Kate Rooney has more in today's Tech Check. Kate?
Hi, Kelly. So that was the message from Fiji Simo. She is OpenAI's CEO of applications. I spoke to somebody who was in the room at her employee all hands last week. The source says that she really emphasized why their enterprise business is so important. This was 2 employees. She really tried to rally employees around that message. According to this person, Simo said that the opportunity is to now take ChatGPT's 900 million users, turn them into high compute users, and transform ChatGPT into a productivity tool. As part of that, OpenAI has been shifting its focus from some of the less profitable projects within the business. The Journal was first to report some of these details. Someone close to Sam Altman also tells me it does fit within his broader strategy for OpenAI. Enterprise and ChatGPT have had the most material impact on revenue ahead of an IPO, and OpenAI is going to need to prove more discipline, not just talk about it. And that is where CFO Sarah Frier is coming in. I'm told by sources she's been getting OpenAI ready to list as early as the fourth quarter of this year, discussing which GAAP metrics to use. We have reported she has been putting out a more defined infrastructure spend, $600 billion versus more than $1 trillion to investors. And then Frier also, I'm told, is beefing up the IR team. She hired Cynthia Gaylor, that's Morgan Stanley's former banker. She was the CFO of Dropbox, to really help get that message out to Wall Street, Kelly.
All right, Kate, for now, thanks.
I mean, dude, if OpenAI is legit going public, that's also pretty big news for the broader equity markets. And that's going to also be important for the companies that have exposure to OpenAI, if that's really going to take place. The other thing that's really important about this with OpenAI is that I think, you know, the question becomes, all right, if they go public, are we at a top? And the reason I think that is possible, Micron, by the way, back at 450, is obviously because of liquidity that's going to enter the system. And you know, Anthropic's going to try to go public at the same time. All of them are going to try to go public. But the reason that might not be the case is also because of how fast their revenue growth could actually take place if they were to go public. And Jensen actually talked about this in his financial analyst Q&A, which is, you know, when he made the argument that these are the fastest growing companies of all time, and they need to be public in order to continue their growth, which means if they can show the growth at the level that, you know, the market's expecting them to kind of do that, then maybe there is a world in which, yeah, OpenAI can exist as a public company. But obviously the market's going to be afraid if they go public and it kind of sucks out liquidity. We got a quote from Senator Majority Leader Thune. Said it remains to be seen if the Senate could pass the $200 billion in funding for the Iran war. Remember, there was a headline yesterday about the Senate requesting that $200 billion, or the Congress or the White House requesting that $200 billion, and Congress would have to approve it. Thune also said the Trump admin will have to show Congress how they want to use the money in order to confirm getting the $200 billion. Wow, Elizabeth Warren probes Trump Fed nominee Warsh over the Epstein files. Oh boy. Kevin Warsh's name was included in a few of those files. So I guess next decade right here up 16%. I guess Elizabeth Warren now is going to try to get him to testify before that takes place. There's just so much shit happening back into it. Like, if a Fed chair has to deal with being part of the Epstein files, goodness gracious, dude. This is just so much going back and forth. So much. 809 on next decade. At least that is catching the bid. And the reason Next and VG are still going up is because the S&P is going down, the VIX is going up, and oil's going back up. If oil goes down, VIX goes down, S&P goes up, VG and Next will probably go down. If the opposite happens, then those go up. Those are your hedges right here. I mean, those and a bunch of other different oil names, but LNG in particular is catching a bid off that. Gold still down 5. Coca-Cola is down 1. Circle is down 6 on the day. Warren requests Warsh's response to the Epstein files by March 31st. By March 31st, Bitcoin back at 69.2. She wants his response to the Epstein files. We have a couple of clips right here from Gabbard testifying. Let's pull these up and see what she's saying as well.
Ignore what you're doing. Why do you guys even have a job? Why do you even advise them? So you're saying tomorrow the president of the United States can say China is an imminent threat, and then he can take his own, no matter what the intelligence says. he can take his own action. So that's what you're basically saying. Okay, let's go on. Director Gabbard, you said that North Korea has intercontinental ballistic missiles that can reach the homeland. Yet, the Defense Department said that Iran was at least 10 years away from achieving an intercontinental ballistic missile that can reach the homeland. Which one is a more serious threat, North Korea or Iran?
These threats are taken within the context of the in total body of intelligence reporting.
So that's, it should be, and that's my point. It's not just about having the capability of building a weapon. It's if they can actually deliver that weapon, if they can, they have the intention of doing that. How many weeks away are they? We haven't heard that there were weeks away. We haven't heard that there are months away. But that's what we're waiting for. Imminent, to me, means is that they're mobilizing troops. They're moving things into position, artillery. They're getting ready to attack. But everything that we've heard is that this is not the case.
Gentleman's time's expired. Mr. Klein.
Getting a lot of these clips coming out about Gabbard getting grilled right here in this assessment. Here's a couple others that are there.
Or the IC make any assessments as to the timing of potential threats facing the United States from Iran in the last 90 days?
I'm sure there was timelines factored into the intelligence assessments that were delivered.
Did any of them show imminence?
The imminent nature of a threat is determined by the president based on a totality of the intelligence and information provided to him.
Did any of them show that there were attacks anticipated within the next 90 days from Iran?
It's too simplistic of a statement to say that because it depends on various scenarios occurring or not occurring.
Did those assessments show timelines for the threats that Iran posed to the United States?
The totality of threats, yes, there were timelines involved where it applied and where that information was available. But again, to your question about the determination of imminence, the president makes that determination based on the totality of information and intelligence.
The bottom line is there is no imminent threat, and you know that, and there's no product that shows that. I yield back.
Mr. Fitzpatrick.
So basically, all these senators that are grilling her are trying to get it out of her that there was not an imminent threat to take the attack. And you have White House officials trying to say the opposite. That says, no, there was an imminent reason for us to take the attack. The markets will be listening to all these testimonies because they're going to be trying to figure out exactly the line of logic behind why we attacked. Again, if there's a real line of logic, markets can look past it and move on and price it in and understand what's happening. If they feel that, it was done out of reckless care, that's when the idea of, okay, well, it's going to last longer if there wasn't if it was done recklessly, there's not going to be a plan to easily get out of it, which means it will be priced in as continuing for longer, and that will be bad for stocks. If it's the opposite, based on different intel that the market is able to learn, then maybe something changes. But I think that's why these testimonies are being interpreted by the market, and obviously it's having an impact on equity prices today. Next decade, still up 14. Micron now only down 2. It was down 8. VG up 12. Gold and silver still down on the day. S&P at 657. VIX still at 2550. Tanner says, I hate the styles of meetings. Drives me nuts. They're never asking a question. They're searching for the answer. They're already assuming. Yeah, I mean, a lot of it is definitely political theater. But I do think they are trying to figure out, at least to an extent, the logic behind the war. Because quite frankly, the only people that have talked about why we've done the war have been Trump and, ironically, Lindsey Graham. You haven't had too many high-ranking officials create the framework to explain to the American people why exactly this happened, which is, again, why I think, the market, and not just the market, but the polling that's coming out is not as favorable to Trump, and he's been talking about that, because people just don't know why we did it. I have multiple friends that have asked me over the past week, because they know I keep up with the news and stuff. They're like, dude, why did we strike Iran? And they don't even care that much about stocks. They're just, they're just curious about why our country declared a war. And I'm like, well, Trump says they have nuclear weapons, and they're like, Iran was going to launch a nuke at us? And I was like, I mean, that's what Trump says could have happened. And so I think a lot of people are just freaking confused. Yeah, Rubio's the other person. Rubio, Lindsey Graham, and Trump have been the main voices of kind of how this whole thing has been playing out. So, look, the problem is it's a highly political topic, right? So if people believe we've had to strike Iran for a long time, they're going to be super supportive of this war. If people are just seeing their stocks go down and don't really think Iran has ever been a major nuclear threat that they have to deal with, they're going to think Trump's an idiot and they're going to be pissed that it's happening. And then you have the people in the middle that are just like not knowing what is good or bad and not trying to create some level of objective assessment. This is a highly politically charged piece of action that we've engaged in. The problem is it has an impact meaningfully on the stock market. I mean, there's a lot of things that are political when covering an administration that honestly, if Trump was out there talking about transgender rights and all this, the market wouldn't care. It's a whole different world. But when you get into a war that affects oil prices, yeah, the market's going to care. And it's definitely not going to care about your political opinion. It's going to care about the economic ramifications of those politics. Let's not forget we're standing behind the women that are getting killed in Iran. Yeah, well, so again, that is one picture to the story. The other picture to the story is that every time we've tried to free people from the level of tyranny that they're dealing with, it has resulted in some pretty horrible things long term. And you have many people that have argued, this is the sort of the lesson of the Iraq war, that we shouldn't have gone in to try to free everybody and give democracy to the Middle East, because it resulted in trillions of dollars of losses for America, tens of thousands of American soldiers dying. And ultimately, when we left Iraq back in 2021 or Afghanistan, we got nothing from it. So there's two perspectives, right, on the whole liberation idea, that all these people are so oppressed and we need to do something to help them. And then there's the actual pragmatic part of, if we go and try to do something, well, we better go all the way, because you're not going to free these people just by doing airstrikes, especially when the new Ayatollah's son or the Ayatollah's son becomes the new Ayatollah, and he's even more radical than the previous Ayatollah. Like, now you got to kill him. If you don't kill him and you don't put boots on the ground, then what are you doing? Like that, I think that is the question a lot of people have been asking, which is, if we're not actually going all the way, why did we do this in the first place? As bad as you may feel about the people, and we had Farzad on the show for a reason, right? For him to present that perspective. But even within his perspective, he was like, if we don't have a plan on actually freeing them, then as morally bad as we feel about the life they're living. I mean, dude, you feel bad about people, go watch a documentary about North Korea. Because, and you guys know how much of a rabbit hole I dive into when I go into North Korea. And recently, Kim Jong-un just won the vote by 99.73%, which was hilarious. That 0.07% is getting killed tomorrow. I don't know who they are, but they're not going to survive North Korea. Like, we should feel pretty bad for the North Koreans, and we should want to liberate them as well. But we're not going to invade North Korea or kill Kim Jong-un. And it's like, if we start being and again, this is not my perspective. This is the perspective of people that disagree with the war, presenting that perspective here. If we disagree with every aspect of how the world is functioning and try to be the world's police officer, we're going to get wrapped up in a lot of shit, which is, by the way, what Trump ran on in 2016. He said, we don't want to be the world's police officer anymore. And that's why I think there's so much confusion, because no one expected him to actually become the police officer of this particular situation. Now, from the counter perspective, this situation might legitimately be different, because Iran is not North Korea and the nuclear threat is real, yada, yada, right? Those are all the sort of foundational reasons for why we did this, according to the administration. But juggling those reasons back and forth is what I think the market is also trying to figure out. And unfortunately, the real casualty right here are oil prices, which obviously affects the entire stock market. Yeah, part of another reason we might not go to North Korea is because they have nukes, which, whether you like them or not, Kim Jong-un was pretty smart about developing those nukes, because he knew that would be one of the ways to stop the U.S. from coming in. But I don't know. It's just, it is one of those things where does this go unless we get a taco? The entire Trump administration's the way to play the Trump 2.0 term in the stock market is to buy the dip when he does something that you think causes a crazy reaction in the market, which it has many times, because inevitably it gets resolved. This is the first time where who knows if it's going to get resolved. Who knows if it is going to officially get resolved. 607 on Meta as that one continues to go down. WTI crude's at 95, Broadcom 313. I mean, market's stabilizing right now, but it's still down on the day. S&P 657, which I actually like, not breaking below 650, even though we are below the 200-day moving average. I think is at least better than not. What do you think about SoFi? I don't know what to think about SoFi. I mean, now it's not down on the short report, right? Now it's down just based on growth stocks getting hit. The short report obviously didn't help. Look, I didn't go through the entirety of the short report, but just they're accusing Noto of fraud. So to me, I'm like, okay. I mean, like, I don't think. I don't know. I don't think that's exactly correct. And as a result, SoFi should be okay. But at this point, every financial stock is just in the gutter. Oh, tomorrow is quad witching. That's correct. Tomorrow is quad witching. Yeah, SoFi replied to this. I mean, SoFi replied. They said, like, this is bullshit. Unfortunately, the market doesn't care. What do you think about Salesforce? I think it's kind of bearish that they just raised $25 billion in debt to buy back 100 million shares worth of stock. It should be bullish, right? But it feels so bearish for them to have to tap the credit markets just to be able to buy back stock. So, no, Salesforce would not be a long for me. Even though, yes, it's cheap. Yes, Adobe's cheap. But look, the biggest thing I also got from this whole GTC conference is that as much as Jensen, and this was my question to him, right? My question to Jensen was, hey, what's going to happen with software? And he said, software, is not dead. Look, I agree with Jensen, but let's just be honest about it. If there are less seats to sell, that's how software companies make their money. They make their money on seats, $30 a seat, $40 a seat, and they sell millions of seats every single year. If there's less seats to sell, the business model has to change to basically AaaS, agents as a service versus software as a service. And that's a new business model that these companies have to be able to deploy and be able to understand how to monetize, because it's not as easy to get 20, 30 bucks ahead anymore, especially when companies are building their own versions of these platforms. And they don't want to pay 30, 40 bucks a month just for access to some piece of software that's not even going to be as valuable to them as just having their own agent prompted to do what they want to do. Now, the moat of these software companies in regards to the proprietary data sets that they have is not going away. And I do think it would be an accelerant in the enterprise. But I think the reason the narrative is bad on software is because, they're going to have to change their whole business model in 5 years. Probably less than 5 years. They will not be selling seats anymore. They're going to have to change it to agents. And, if you do have less software engineers, that also makes it hard to sell seats. Now, granted, Jensen said there's going to be way more engineers because there's going to be so much more work that needs to happen because of AI, which maybe he'll be right on. But I think that's why the software names are a little tough to easily get into. The one I do like is Zeta because I think it's cheap, and I think they do have a moat with first-party data. But obviously the others are a lot more safer than Zeta. They just might not get the multiple they were getting before. Tanner says, what do you think about Micron? Tanner, if you want to hop on the show for 5 minutes, we're going to end it out in a little bit and give your thoughts, then you're definitely welcome to come on. I think I know you covered the Micron earnings yesterday. Look, I thought those earnings were some of the best earnings I've ever seen. I mean, legitimately some of the best earnings I've ever seen. And it really makes me want to say, screw it. I know the stock's up 5x, but this thing is going to double. It's going to go to $1 trillion. I just haven't gone that far yet. But the biggest thing I got from them is that the memory cycle will last until 2030. If it's going to last until 2030, then, Micron's probably going up, dude. It's just, again, I think we all know that, but there's a reason we've been hesitating to buy it. Most of us, I think only 30% of you, I asked in the chat yesterday, own this name. because it's a cyclical business and it's run up a lot and people are afraid of it. So I get it. All right, I'm sending Tan the link. But the quarter was incredible. It was absolutely incredible. Are you 100% out of Nebius? No. So I sold 60% of my Nebius at 105 2 weeks ago. Stock's at 119. Look, I am very impressed by this Meta deal. And I also am starting to think that Nebius is really showing themselves to be the best neocloud in the space. So, would I get back in and reallocate the position? Maybe, but I also I don't love the dilution. I don't think that's a bad part of their business model. In fact, that is part of their business model. I just don't know how overly allocated I want to be to it. And I just feel more comfortable in NVIDIA. So, it's about risk tolerance. And if you have super heavy risk tolerance, then yeah, you go heavier into Nebius because they've given you all the reasons, or CoreWeave or Iren, pick your favorite neocloud, even though I do think Nebius is easily standing out as the best one. But I also just like to be in something that's a bit more safe. And it's based on your prerogative at this point. And in this market, you just have to kind of be able to make that overall decision. But I do think the community that's forming around Nebius is also really good. I mean, I'm seeing accounts on Twitter that are like just all in Nebius. Like they're like full porting it, like how people full ported Palantir back in 2022. And I'm like, when you have a community that's strong, that's also an asset. We cannot forget that is a very valuable asset to have that many people. This is what we saw with ASTS, and I missed it on ASTS. Freaking, there was such a big space mob on this community that full ported this thing basically under $30. And I think that community itself has also been an asset. So, I think it is the best neocloud that's out there, but it's based on how much risk you want to load up for going into this year. Tanner, good morning.
Good morning, brother. How you doing?
I'm good, man. What are you thinking about? Well, let's start with Micron, because obviously that was the one you covered yesterday. Were you as blown away as I was when you saw those numbers?
I got a pretty ridiculous clip online, and looking at the stock price afterwards, I think I freaked out a little bit. But you don't see companies often, especially $500 billion companies, beat on revenue by 22% and then end up raising guidance by 46% or whatever it was. So maybe it was all priced in, but I think that this is going to continue for at least 2, 3, maybe even 4 more quarters. And this is a really weird name. I think everyone is aware that this is going to come to an end. There might be new innovations like 3D DRAM that end up just completely changing the pricing dynamics for memory, but that is probably not going to happen until after 2030, into 2030. So how much growth at high margin do you want to put up if it's going to end up ending eventually?
Okay, so I think that's the question, right? Because the forward PE is now 10. And you're saying you have 4 or 5 quarters left of this momentum continuing. But once again, the reason the forward PE is only 10 instead of what it should be, which is probably 35, is because of the fear of it ending quickly. You and me are not memory experts, but how are you rationalizing the multiple in comparison to the insane growth versus the inevitable cyclicality of the business?
Well, I think that so I do have a position.
Oh, when did you buy? Yesterday?
Monday before GTC.
Okay.
So I bought before GTC going into, it was an earnings play. And I said, like last time, we went up like 5% or so a few quarters ago on a pretty unbelievable earnings. And then over the course of the next few months, then the stock started to run. So I'm definitely in this for the next few months. If we see larger dips, maybe I might double down. I tripled down after earnings during the sell-off. I saw some comments saying I'm down. I'm not down. I'm up like 1% right now, but it's not, obviously I'm not doing the trade to make 1%. So I'm holding.
No, but when you mean triple down, you mean do you want this to become a legit position that you get out of in a couple months, or like how much of a weighting do you want this to get?
I'm not going to build this past like a 5% position, or like it's not going to be crazy.
Okay.
But I do think that we're going into a $33 billion quarter, 81% margins. What are we talking about? So, and then on the potential that they actually beat that number might happen again.
Yeah.
So, analysts are starting to come out. We're seeing price targets as high as $700. Like, I think it's, I definitely think that there's some upside here, but it does scare me. It's the most scary version of the AI trade is memory.
But the reason you're in is because the numbers are just too compelling, right? Like that's ultimately.
Yeah. There's a lot of narrative play, but I mean, at some point, like you can't grow this fast and not see like at least the way that I'm seeing it. Can you imagine next quarter? Like we're calling for like $19 in EPS, and what we actually see is like 22. What we actually see is like $38 billion of revenue. It's another total beat, and then they end up raising guidance, which they said for Q4. They said we're not going to give out guidance, but we are 100% like supply constrained. The exact same things that are helping us raise up pricing is going to happen in Q4. So I think there's going to be a similar, maybe not as extreme, maybe not 22% and 40% for revenue and EPS respectively, but a double-digit beat on both ends. And if that happens again, raising guidance, showing full year for next year, which should have no change on pricing, because although they're acquiring companies like crazy, SK Hynix, Samsung, they're all trying to get clean room space right now, but they don't really, like, these things take years. And so while they just acquired this new company in Taiwan for like 300,000 square feet of fabrication space, they don't hit production till fiscal 2028.
Yeah.
So they can't move fast enough. Like the whole industry got hit flat-footed, and the beneficiary is the memory names. There's actually so many interesting things that happen during this. Like, what does this do for iPhone prices, for laptops, for just any other space other than artificial intelligence? Memory prices are going to go through the roof. They essentially 2-3x'd, and now you're seeing experts in this field like Dylan Patel saying that it's going to 3x from here. Like, so Dylan Patel got me excited, and that's why I bought the trade. And honestly, I'm happy I got the trade. Like, the numbers were exactly as exciting as I thought they were going to be.
Yeah, and the stock being flat might be a gift for you to build out this position, quite frankly. Right there.
I mean, there's been a lot of things that have been flat or down to build positions in. I'm done building positions. I'm ready to, I'm excited to start taking profits. And there's not a lot of areas for me to do that in unless you're playing in a bunch of different fields. But in the tech and fintech place that I, am focused on, honestly, I'm done taking, I'm done building up positions. I want to start taking profits.
But real quick, guys, headline: FBI is now investigating Joe Kent after resigning. So this stuff was inevitable. It looks like he will be facing a lot of investigations from the FBI now that he is publicly talking a lot about what has been happening. Before we get into SoFi, let's talk about GTC in general. What was your takeaway from the event? Did you kind of feel underwhelmed, or did you think it was a good GTC?
No, I was really excited. The only thing, honestly, the one comment that made me really not happy was that comment about 50% free cash flow going towards buybacks and dividends. That seemed like Jensen, and I'm a huge fan of the whole company. I'm not trying to be bearish or anything, but it seemed like he was grasping at straws, because a month ago he said that they're going to be putting it back into the ecosystem and they're not going to be focused on buying back the company. And then that didn't move the stock. The $1 trillion comment didn't move the stock. And then they made that comment about buying back stock and dividends. And I'm like, okay, are you just trying to move the stock? Like, are you trying to see what's working right now? So I thought that was a little bit of a narrative shift. And yeah. And if he would have said, hey, we're going to increase, I see a comment, too much cash, Tanner. If he would have said we're increasing buybacks and dividends, that makes sense. But as a percentage of free cash flow means you're not just increasing the buybacks and dividends. You're increasing it as a percentage of free cash flow, which is a change in strategy.
Do you think he's really annoyed that nothing he's saying is getting the stock to work?
Yeah. Yeah.
Because
the premium on this company has just fallen, and if this stays at this price into next quarter, like we're going to have trailing like trailing PEs that are under 30, let alone forward PEs that are under 20 right now.
Right.
So yeah, it's very, very cheap. And not only that, like, I don't think that this the pricing power that NVIDIA has is nearly as cyclical as memory. NVIDIA can hold up some pretty great pricing and then end up doing maintenance to, like, because GPUs only have a certain lifespan, to continue to replace Ampere and Hopper and Blackwell with Vera Rubin, Vera Feynman's, Grok technology. And they should actually be able to keep up decent pricing and maintain, good sales for quite a long time.
So what is your logic?
The market is hating them so much.
Well, I was going to ask, why do you think the stock is depressed? Do you think it's the war, or do you think there's a deeper reason?
Yeah, it's a lot of uncertainty. I think in AI in general, people don't know what's going to happen. And then the macro is not great. I think there's war uncertainties and everything like this, but yeah. Was he right behind you? If you move your camera, can I see Davis?
No, unfortunately. Good. But he will be in LA, so I'm getting ready for the jokes of.
Yeah.
He was like, why do I need to book my own hotel room? You have 2 beds in your room, right? I was like, oh my gosh, I'm not going to hear the end of this. I'm not.
Only a king bed, even better.
So you guys will see Davis next Friday on the market open. I tried to get out of it, but I can't. Okay, SoFi. So I think it's very I'm just annoyed that you're getting a lot of shit for this, because you shouldn't be. The quarter they had was amazing. I thought the Muddy's Water report was stupid. The stock is down a lot for the year, but obviously I don't think anyone blames Noto. He came on your show. He talked to you personally about it. But nonetheless, people are pissed off, right? Because the stock is getting hit. Do you think this Muddy Waters report had any truth or logic to it? Or do you think it was purely something for them to be able to just essentially cover their short after making a big move on a 5% down?
I think there were sort of 3 different things that they covered. One thing, there were a couple things that were just immediately disprovable, and you saw Stephen Fiorillo post about that on X. So things like personal loan default rates and the selling of delinquent loans and all of that stuff was just false. That was just inaccurate. Then there were some things like fair value accounting and the dilution and stuff like this, which are negatives to the company, but everyone is aware of them. Like, that they didn't end up bringing up something that was new. Okay. And then the third one was accusations that no one could prove. So things where they were saying, we believe that they're doing off-balance sheet lending. We can't find where these debts are going to, even though auditors and everything have given them the full green light. Like, they're working with Deloitte, they're working with the Federal Reserve, they're working with the Office of the Comptroller of the Currency. None of these companies or regulatory bodies are putting up red flags, but Muddy Waters, who does not have nearly the access into their books, says we believe or we assume or anything like this. So those I just can't even defend, because I'm not Deloitte. I'm not an insider of the company. Obviously, I don't think that this is a negligent business or Enron-esque. I just think it's crazy.
Well, why do you think they're going after SoFi here?
They're a short seller. They're looking to make a profit. They sold at the time or said, there's a high chance that we sell at the time of the publication. They're making money.
Oh, they said that in the report?
Yeah. Like, they're probably out of the position already.
But why do you think they picked on SoFi? Do you think they just saw sentiment was bad and they could come up with a narrative, or?
I don't know. I mean, honestly, fair value accounting is super hated on Wall Street. It brings up a ton of red flags. It's not necessarily bad, Like they're both legal. So essentially, the way that a JP Morgan would put a loan on their book is that they take all the losses up front and then they take the profits over time. Okay, CECL. Where SoFi takes all their profits up front and takes the losses over time. It's less conservative and it's more aggressive. People do not like that because, you know, you could end up finding that the losses are way higher than what you would assume or something like this. And so the fair value marks, like where SoFi says, hey, this is what our loan is worth based on, you know, what we assume that the loan is worth. Essentially, a bunch of institutions can essentially like point to that and say, hey, but you're lying. You're giving a bad mark to your own loan. You're pumping up your own books. But the I guess the bullish defense to that is institutions are buying SoFi's loans for more than their fair value marks. They're buying them at premiums. And then companies like Fortress Group, not only do they buy, they come back and buy more. So they're happy with the loans, they're happy with their performance, and then they come back. The weird thing is that SoFi, although it's getting beaten down, I'm not even rushing in to buy more right now because I actually think there's just so much upside in the AI trade that I'm continuing to buy names like Nebius and Micron or NVIDIA or stuff like this. Because if we do end up seeing something where we end up getting a rate hike or too many rate pauses, or we don't get a rate cut till, you know, the end or midway through 2027, that's greatly going to hurt SoFi. Like there are reasons to be bearish, but it's not because of the Muddy Waters report. It's because of the macro.
So I'm happy you brought that up. That is actually the major reason that I feel like SoFi is really struggling right here, at least over the past 48 hours. It's that the rate cuts are now priced out for 2026. And Noto in the guide had 2 cuts, right? Yeah. So your argument on picking a Nebius versus SoFi right now is basically macro. It's not their loans are unworthy of being sold. It's that if they don't get interest rates, the market's not going to give them the premium they deserve.
Yeah, the premiums are so high on token sales for Google and Amazon and, you know, the OpenAIs and the Anthropics that a quarter point rate cut doesn't even change the mathematics for any of the hyperscalers.
Right.
I mean, it does, but it's not nearly as effective as a name like SoFi. So they can grow through like even a recession. like they're very strong businesses.
Let's talk Nebius. Then the last thing, and I'll let you go. So big deal with Meta, $27 billion, obviously very important deal. The next day, they dilute by about $4 billion senior convertible notes. I think the terms of the deal were actually pretty bullish. They weren't like the sort of at the money Iran $6 billion deal. Is it a buy still at 120? I mean, do you think this thing is going to 200? Do you like how the community is forming? How are you thinking of this name in particular?
Well, clearly, I think it's a 10x. No, but yeah, I mean I think the pricing on the notes, like weighted average across both of the 2031s and the 2033s, was like $182 a share or something like this for it to convert.
Yeah.
And then the interest on those loans was like 1.4% or 1.6% averaged out. So it's really low cost of debt. And obviously, like you said, whenever we had our conversation, they will have to dilute in order to grow at the speed that they want to continue to grow at. So I was not surprised by this raise. And in fact, they actually increased it to like $4.5 billion. So yeah, this is great. Yeah, Manuel is perfect here. But overall, token sales are profitable. They're growing so fast that it's not going to show up at the bottom line. But and you know, if it's not your favorite company, me saying adjusted EBITDA is everyone's going to make fun of that unless it's their position. But they are profitable on those token sales. They just continue to grow super fast, so it's not going to show off as being profitable right now.
Yeah, and I do think they are proving themselves to be the neocloud. I mean, even in GTC, dude, they're everywhere. Like they have Nebius boba trucks. Like they're just like they are in the ecosystem of AI. And I think that's where you're seeing Jensen giving them a lot of love and the market getting more excited about them. Would you buy Nebius or Micron at these levels? Had to pick one.
For a long-term investment, so I think this is strategy dependent. Nebius will have a business for a long time. Like cloud providers have proven that they can have customers for decades. So Nebius would be the long-term play, but there is a major price supply constraint and pricing advantage on Micron today. And that could maybe go out to 2028 or something like this. So in terms of a trade, I would say a Micron today. In terms of a long-term investment, 1,000%, I would pick a Nebius over a Micron.
I would agree with that. I would agree with that. All right, Tanner, thank you. Last thing real quick. Noto responded to this report by buying some stock too, right? So
yes. Yeah.
I mean, this was also pretty nice to see. Yeah.
Yeah, I mean, it's not a ton, and everyone is pointing to that, like, oh, the guy's worth $300 million. Like, it's not a big buy, but he has continuously made small purchases over time, and I think the total amount of purchases like in open markets with cash is about $18 million total. So
a lot of money, bro.
A lot of money especially for the short report saying that they're just diluting the company for insider bonuses and everything like this, which they're not even going to hit their 35 marks or 45 marks. But to put $18 million of that money back into the stock that you're only here to rinse seems like a bad strategy. So another point against the Muddy Waters report that I think was not true. But yeah, it's a long-term hold. Thank you for having me, Amit. Appreciate it.
Yeah, Tanner, thanks for joining. Tanner's YouTube's right there. He will be live in about 2 hours on Market Monitor, so you guys can check him out in a little bit.
Thanks, dude. Peace.
Thank you, Tanner. Appreciate it. Later. All right, so we got Tanner's perspective on SoFi, Nebius, and Micron. We do have quad witching tomorrow, so that could also create a little bit of volatility. Micron now going red. It lost 450. It was at 457. Now it's at 447. Ironically, the S&P, though, not going green, but getting the closest it's been. Never mind. It's back down. It was at 659.71. It was 30 cents away from 660. And now we're right back to 658.75. But we did have the VIX go down a little bit. It's probably back up. It's back up a little bit, but it's almost ready to go red. If the S&P can make that final push right here, another $2, VIX will definitely go red, and maybe we'll start to see some movement. But once again, it's part of the chop. It's part of the chop. Rocket Lab, that's at 71. This thing was down 11% yesterday. That's up. ASTS is up. NVIDIA trying to push back to 180 again. It's at 179. Many of these names continue to be red, but not as red as they were at 930. Even Tesla, it was at 380. It's now at 384. Nubank also was below 14. Now it's above 14. So Palantir 154. Obviously, it's really hard to know exactly what direction it might end up taking, but up and down continues to be the story every single day. Quad witching is the simultaneous expiration of single stock options, ETF options, index options, and then there's one more that I'm forgetting, but it's all four of those put together. I think it's like single stock, index options, ETFs, and then there's one more that expire all at the same time. It happens 4 times a year, and all the derivatives of those companies expire at once. Futures, thank you, Tanner. Futures. So you have single stocks, ETFs, index options, and then futures. They all expire at the same time, 4 times a year, and that'll be happening tomorrow. Doesn't mean we have to have some crazy market reaction, but it does mean there's like trillions of dollars of options that are expiring, and that could create some pain. Look at that. We got Mr. Milkman in the chat. Let me see if this guy picks up the phone. If he's able to be in the chat, hopefully he's not in a meeting. Hopefully he's able to pick up. Let's see. Okay, he picked up and then he hung up. We'll see if he calls back. Let's see if Mr. Milkman can give us some thoughts. S&P right there. So yeah, quad witching is not that serious, but like obviously could create some volatility. Last couple of quad witches have been rather flat, like nothing really happened. But something could happen.
6.
Okay, Steve, I'm calling you right now.
5. 1.
All right, Steve, you call me. You call me. I'll just pick up. Me and Steve are trying to call each other at the same time. That's why it keeps. Okay, there we go. Steve, good morning.
What's going on?
Well, you know, I've been out in California for the past couple of days, and I'm soaking in the Cali sun.
I know you got to ask Jensen a question. You're hanging out, seeing the Nebius booth. I mean, we see. Very excited for you.
You're gonna be you're gonna be in the Cali sun pretty soon with me in a couple days.
I know. When Jason told me how warm it is, I was like, "But I'm gonna melt out there."
Yeah, it was actually hot as hell last night. I had Jason with dinner again last night, and we were talking about you. And
nice.
Yeah, we are excited to meet you. All right, so I'm gonna be out in like 10 minutes, but I mean, I do want to get your thoughts on what the hell's happening right now.
Well,
across
I took a day off. I'm gonna
go
right after you.
I could have just sent you the link then if you took a day off.
You can send me the link. I'll come on.
Okay, we'll do that. Why didn't you tell me that? All right.
Well, you know.
All right, we'll get Steve. All right, I'll send you the link. All right. Guys, I think Steve is not really I'm just saying, this is like what, the 4th day he's taken off in the past month? I think our boy Steve is not really happy with corporate America anymore. I don't know. Let's send him the link. Let's see what Mr. Steve has to say. Amazon right there, 208. Do we have any other macro news coming in? We looked at home sales. There was a bunch of headlines around some of these refineries being attacked. Cactus was putting those in when Tanner was live. But you don't see the VIX really spiking here. Micron, again, it was at 420, caught a bit to 457, now right back to 446. So it's trying. VG just fell from almost 17 to 1550. Again, VIX went down, VG went down. Because VG goes up when the VIX goes up as a hedge against the volatility of oil prices. So you just got to be very careful with some of these plays. If they are purely as a hedge or purely to play the theme, if the theme breaks, the hedge breaks as well. But as of now, they have been performing pretty damn well. Erwin said I also took the day off. Oh my gosh. Is no one working anymore? Are we all just looking at our portfolios get nuked every day? Are we all just ready for AI to take our jobs? There's no point to work at this point. Oh my gosh. Steven.
What's going on?
You're blurry. Oh, now
What
you're
are we talking about?
He's a little blurry, right, guys? Maybe just like maybe just do this to the
I think the camera's fine.
No, everyone's saying you're blurry. It's not that big of a deal. Yeah, now it's good. Now it's good. No, you just need to be in focus. Now it's good. Should be okay.
It's good?
Yeah.
Okay.
Okay, you're good. Hello, sir. How are you?
Good. You know, I got up and I was like, you know what? I'm not going to the office today.
Okay, so hold on. So this is one does not just wake up and say they're not going into the office. This is a new milkman that we're.
The milkman does what the milkman wants to do.
Well, no. First of all, you only do that in corporate America if you are, feeling yourself a little bit too much here.
Let's just say
that
the milkman does what the milkman wants to do. And I did not want to go to work today. So I'm like, you know what? I'm not even going to get in the car.
This is a man who bought some VG at $6, probably.
I did not buy VG yesterday. I bought it a while ago and not enough.
Okay, let's get some of your thoughts on the market because this has been kind of crazy. I know we haven't talked over the past couple of days about markets in particular, but I mean, generally, what the hell do you think is happening? You got Trump officials resigning, you got oil spiking, you got Trump throwing Israel under the bus. Like, how are you kind of rationalizing the price action that we're seeing?
there's no rationalization to happen. This is a bad situation. This is the black swan event that nobody predicted. I mean, out of all the things that could have happened, not one person that I know and not one person on the financial pundits that I listen to predicted that an attack on Iran would happen. Okay. So this is the black swan event that nobody saw coming, and it's bad. There's no way to sugarcoat it. Now, it hasn't gone on long enough to change my outlook for the year, but it's getting dangerously close because the longer that you keep oil above 90 and above 100 on Brent, the more that it's going to creep into the macroeconomic environment and keep prices inflated. You heard it from Powell yesterday. They're very worried about inflation. This is a risk-off scenario. You got rotations. This is not good.
The PPI print was bad.
Yes, it was.
Like really bad. Oil going up is also really bad. I mean, does your gut tell you that this situation isn't ending? But does your gut also tell you that doesn't mean markets have to fall 20%? Like, how are you thinking of price action of the broader market, even with this inflation data?
I don't know that we can say the market isn't or can't fall 20%. Here's the reality. If this is elongated, if this continues to happen and prices increase, you run the risk of companies re-rating guidance to the downside after Q1 earnings.
Yeah.
Because everybody created their forecasts in a much different macroeconomic environment where oil is between 55 and 65. Oil controls the narrative. And it is going to be crazy if we start seeing the big companies re-rate guidance to the downside, because that will destroy confidence, it'll destroy sentiment, and likely cause a bear market.
Oh, so you're people in the chat are saying, "Where's the I don't care, Steve?" It seems like you care. You're not selling, but you care.
Oh, I don't care. I'm just saying what it looks like is going to happen. Like, you can't say that, oh, everything's fine for the short term. Like, for the long term, is everything fine? Yes. If you're buying S&P, obviously it's fine. This is when you want to buy more, in my opinion. People who are buying every 2 weeks, they're getting much cheaper prices than you got at the beginning of the year. So the I don't care, Steve, is still here. I'm just calling it like it is, balls and strikes. The reality is that right now you got chop. Right now you have momentum to the downside. And right now there's a lot of uncertainty that you can't just say is going to go away tomorrow. It's a much different world than it was 3 weeks ago.
Yeah, and I think, obviously most of us, you, me, Tanner, Chris, all of us in our friend group, the way we think about investing is you don't go full cash when things get ugly, because it ruins compounding, and the ability to consistently catch the bottom is it's very difficult to do. So you DCA into your high conviction names, get rid of the names you don't like, and you live to fight another day. But the reality of the situation is you can't be blind to the fact that the Fed is not going to cut if inflation continues to go higher. If oil doesn't go down, inflation will continue to go higher. And as Tanner said, if SoFi's price for 2 rate cuts, or Robinhood's price for cuts, or growth stocks in general like Reddit need that extra liquidity, BMNR, Ethereum, crypto, old needs that liquidity. If that's not happening, at least not in 26, then those assets just might not be able to catch a bid. And that's what we have to deal with.
Yeah, look, I haven't sold a single thing. I am still buying the S&P. I almost pulled the trigger on buying more NVIDIA this morning. I am loosely considering pulling the trigger this afternoon. I had said in the beginning of the week there were a few things I wanted to buy, but I wanted to wait till after Powell spoke because I thought he was going to spook the market. Looked like he did. He may also not be leaving in May. So that's also not good. He's saying that he wants to finish out this probe. We don't know when the confirmation is going to happen at Warsh.
Dude, isn't that crazy that the reason he might not leave is because of Trump probing into him? But the number one thing that Trump wants is for him to leave.
Right. It's an FU to Trump.
It's a literal middle finger to Trump that he
100%.
Can't leave because of a probe that Trump started.
100%.
It's absolutely crazy, dude.
Look, do I think that the market is going to be okay long term? Absolutely. Short term, it may not be, and I don't care. Like, I'm not an investor for tomorrow. I'm an investor for the future. Today, tomorrow, that's where traders make money or lose money.
Okay, let's talk Micron. I think you saw those earnings.
Yeah.
What was your reaction?
I mean, there's no other reaction than it was incredible earnings. It's just they could have done even better, and the market would have sold them off. Yes, it was the worst day they could have reported. So,
does it make you at all interested in pulling the trigger, just given the peg?
The stock is so cheap right here.
It's so
and
cheap.
The problem is everybody has it in their heads that DRAM and NAND or boom bust cycles, and everybody's asking when this cycle is going to go bust, not boom. And that's what's going to hold it back and make it probably go sideways or down for a little bit. The numbers are incredible. It's cheap. The biggest silver lining is it gave a lot of confidence to the AI revolution, that the build out is incredibly real, and it backs up what Jensen said.
Okay, so let's pivot to Jensen then. I mean, I think you've caught all the highlights from GTC. I've been here, and let me just say, to be honest, with the friends that I've been with, it is a bit underwhelming in terms of the announcements, because a lot of this stuff has already been known. There's nothing that new outside of that $1 trillion number that the street didn't really care about. Did you?
If you did not go to CES or watch CES, do you think you'd still have the same opinion?
Maybe, because again, robots and self-driving, everything is the same as the last GTC, including the Uber partnership. Vera Rubin, they've talked about for the past year and a half. Now, CES, they went in depth on it. GTC, they went kind of in depth, but like, people have known about Vera Rubin for a long time. Feynman hasn't really been talked about as much, and so I guess that's the next big surprise. And then outside of that, you just had the agentic infrastructure with NemoClaw introduced, which was important. And I don't blame NVIDIA for not having more announcements, because I mean, like, at the end of the day, how many can you do? But it did feel a bit underwhelming. Did you think there was that big moment at GTC that you feel the stock should be reacting to?
I mean, I think there's a lot at GTC I liked, and there's a lot at the NVIDIA conference I like. I think NVIDIA is one of the most underappreciated positions. It's one of the largest companies with one of the largest growth rates and trending to be the most profitable company in the market. And it's trading at less of a multiple than a lot of companies that are considered value. So at some point, this is going to turn. It's just there's a lot of things going on right now that are holding the market hostage.
Yeah, and from NVIDIA's perspective, I don't think they said anything here to change the narrative around their growth of because they already guided for such unbelievable growth, and the stock didn't move. So it's like, what could they have possibly said at GTC? And they ended up not saying anything really that game-changing, which is not their fault. But they also, outside of the numbers they've already presented on the guidance, how much more could they announce? And I think that's why Jensen's also pretty pissed. But I agree with you. At some point, it's got to break. And maybe the war's got to end before that happens. But I also agree that if this war continues, NVIDIA's not breaking out, Reddit's not breaking out, Robinhood's not breaking out, Bitcoin, like, it's an overhang on the entire market. And that's why we're spending so much time analyzing every single angle of it.
It's a difficult situation. There's no question about that. And you have a real possibility of inflation creeping up and zero rate cuts this year. I mean, we're at a 48% chance that you don't get a rate cut. If Warsh gets held hostage and doesn't come in until the summer or fall, I mean, think about what that's going to do to the market. Like I said, this is a much different, this is a 180 from 3 weeks ago, and nobody can act like it's not.
Dude, there's a 6% chance for a hike in April.
I mean, that just tells you everything you need to know about how sentiment has changed.
No, but could you believe if they like seriously thought about hiking in the midst of all the shit we're dealing with?
Yeah, they're worried about inflation, but you know what's even worse? You're likely to get more job cuts.
Well, so my theory, okay, on why Jay Powell's downplaying the labor market is because he knows if people lose their jobs, they stop spending, and that gets inflation to come down. And he's trying to basically say labor market's not a concern, even though he knows it's a concern, because he also knows that might be the only thing, aka a pseudo recession, right? He doesn't want to say that, but like that would cause inflation to come down, which is what people thought was going to happen in 23. But we got saved by the bell with ChatGPT. maybe that doesn't happen this time?
I don't know. It's a very interesting situation right now, and gotta hope that this gets cleared up overseas. I mean, we don't want loss of life. We want everything to get back to the way that it was. Obviously, at this point, that's going to take years and years and years. But stagflation has come in. Isha's right. Stagflation is a possibility. This is going to be a stock picker's market, or a market where you just buy quality or just hang out in index funds for a while. This could stay like this for months.
Do you think there's any credence to the SoFi short report?
Do I think there's any credibility to it? No, I don't. I don't think that they actually understand the company, and I don't think that they actually read through all the information. I mean, I put one post out last night, and I said my piece on that one aspect. I'm going to make a video about the whole thing. I know I'm going to talk about it tonight with Tanner and tomorrow with Roy and Tevis, but I don't think that they did their homework, because their main points are very easily disproved. But the short report doesn't matter. I mean,
yeah,
SoFi is hostage because of two things: the macroeconomic environment with private equity and rates, and two, the market is looking at them as a bank.
What have you been doing in the port? I mean, I imagine you're just DCing into the names you like, but are there any new names that are attracting you, or just?
I mean, there's things that are attractive. I mean, the other day I said to Tanner, I called him up. I'm like, I just need to give him my account information, because I said that we should buy Reddit at 135 and it went to 144 or 146. Then obviously this happened, but Reddit looks really interesting to me. That's the only thing that I'm really looking at that is interesting by the numbers. Next is looking interesting, even though it's up a little bit. I think it'll scale back a little bit after all this craziness is over. But yeah, Reddit next, and that's about it. Everything else is just the stuff I've been talking about. I don't think anything really changes for NVIDIA, Meta, Microsoft. I actually bought more Microsoft 2 days ago.
I was going to ask you about Meta. Like, is it getting stupid, or do you think the large caps will go lower if a market crash happens and you'd rather wait for? I mean, it's $5 away from going below 600.
I mean, can it go lower? Yeah, it's at 605.96. But long term, we've been here before. I mean, for long-term investors, we rode this down to 88. I mean, it's not as bad as it was then.
Yeah. It is definitely an interesting market environment, to say the least. And it's funny, too, because it's like, you know, the sentiment I got from some of my investor friends at GTC is, you know, they're pretty annoyed because they were just like, this didn't need to happen. They're not talking about the politics of it. They're talking about just the idea that this much chaos didn't need to happen if we just had a different approach. But the past is the past. It's over. Now we're living in it. We've lost all the moving averages. And now the question is, can we have any level of recovery? Do we put boots on the ground? Do we go for regime change? Do we claim victory for getting rid of their nukes and leave entirely? Do we hold back on more attacks on refineries? Like, now there's so many more variables that are attached to this. Forget this market, this entire year, when analyzing everything that's going on, that it almost seems impossible for this to just V-shape out of the misery and go back to normal. But that's exactly what it felt like back in April of last year. And we had a V-shape. So
yeah, the difference is April was all words. Words can be taken back, policy can be revoked, that type of thing. You can't take back airstrikes. Big difference.
Yeah.
Like, these are permanent decisions that you cannot take back. So we're in a much different situation than April.
Yeah. All right, Steve, thank you for hopping on. I will link Steve's YouTube right here in the chat.
I will be going live now. And then, Matt, you said you're not doing the close today, correct?
I'm not doing the close. That's correct.
All right. So I will be going live now for about an hour and a half. Hold everybody over until Tanner comes on, and then I will be filling in for Amit to do the market close, entertain everybody.
Steve,
when are you flying back tonight?
Yeah, I'm flying back tonight. I think you're going to have to be spending a decent chunk of your hour and a half right now streaming Mr. Donnie T, because he's about to be live.
Is he live on CNBC or Fox? Where is he?
You can just stream it from the White House YouTube channel.
Oh.
It's a bilateral meeting. I don't know who he's meeting with today, but.
Well, I got everything set up so I can show CNBC and everything else.
Okay. Cool.
Based on what you told me.
He will likely be talking, guys, soon, so get ready for a bit more volatility. We'll see what he has to say.
Trump participates in bilateral meeting. All right, so I have it going. I can stream this live?
Yeah.
Okay.
It's the White House channel. I mean, dude, we're the taxpayers, right? If we can't stream the
that'd be pretty messed up. Like, we are the taxpayers.
It was kind of wild, NVIDIA nuking Tanner's stream, bro. Even I was in the chat when it was happening. I was just like, what? Nuked his stream.
Crazy. All right. I'm going to start the show and make Get Home safe. Call me tomorrow.
All right. Later. Thank you. Talk later.
Later. See everyone in a few minutes.
They would probably ban me for being Canadian. Dude, I was so bored at the GTC keynote that I went to Tanner's chat and I just started talking to everybody. Honestly, it's no shade to NVIDIA. It's just like, dude, it was boring. Like, it was not that interesting. Like, my entire row, all of us were on our phones, bro. We were on our phone. Like, the keynote wasn't like that, big thing. Everyone was just like, all right, we're chilling. We heard about this stuff before. And so the chat was more fun with Tanner. And then, yeah, he got raided with the bots, which it happened to me a month ago, and I had to change it to subscribers only mode to fix it. But it was like 50 bots every other second coming in. And then I go to check it, and then the stream is banned. And I'm like, the last time this happened was Apple banning their Vision Pro event in 2023. Usually NVIDIA doesn't do that. So that was kind of weird that they did it. The bot rate, it was hilarious because it was them begging to send you Ethereum. It wasn't even a weird crypto coin. It was ETH. It was something we all know. So that made it worse because it wasn't some random meme coin they were trying to sell. But yeah, again, I don't blame GTC for not having a ton of announcements here. It's they've already announced so much, and realistically, this is not a conference for finance people. This is a conference for developers and and it's always been a conference for developers. It's just now that NVIDIA is the most covered company in the world. The finance people like me, Tanner, and Steve, we want real financial stuff. But in terms of what they showed off for developers, I think NemoClaw is the biggest thing they announced, and if they can accelerate the push of open architecture agents in the enterprise in collaboration with the other software names, that is very bullish for overall growth of token generation, which is good for revenues. But obviously, that's gonna take some time. By the way, Morgan Stanley finally put out the video of Jensen talking about you can't hold the stock back, and I thought it's pretty cool to see Jensen kind of telling everyone about the stock itself. So this was from the TMT conference a couple weeks ago where he had that quote.
How do you think about that? Well, of course I care about the stock. I care about shareholders. I care about our employees. I care about all of you. And you might be referring to, we just had the best earnings in the history of earnings. Is that what you were saying? I think somebody actually told me that this might be the single best print in the history of humanity, and I said it must be only recorded humanity. I'm sure somebody had better returns, but anyways, we had a very good quarter. Listen, you can't hold the stock back. You can't hold it back. And
look at his hand movement too, bro. He's pissed.
Listen, you can't hold the stock back. You can't hold it back. And the reason for that is very simple. Compute equals revenues for companies. In the future, every single company will need compute for revenues. I'll just make that prediction for now. Every single company will need compute for revenues. And the reason for that is because compute translates to intelligence, which translates to your digital workforce, which translates to your revenues. I'm certain compute equals revenues. I'm certain.
And this is a lot of the same stuff Jensen said at GTC, and the push for agentic infrastructure in the enterprise also is going to lead to more revenues, which would lead to more compute. But the street's not buying that narrative yet. S&P going back down 656. We just lost 657. VIX is spiking again. Bitcoin going down again as the chop continues. All right, let's end it off on this. And then I will not be doing the market close today again. I will be on an airplane, but we will be back on Friday's market open. So no market close today. We have FedEx earnings. We'll be back for Friday's open. And yeah, Friday will be a regular day tomorrow, open and close. And I am not traveling at all in April. So April, we will have nothing to worry about. We do have the LA meetup in March, end of next week, March 28th. Outside of that, April will be completely free. And so we won't have anything else to worry about in terms of disrupting the schedule. Okay, so here's the last question. What stock and stock price is the biggest, oh my goodness, I need to refinance my house, don't actually refinance your house, but refinance your house type of moment? Like, what is the price and the stock? You can only pick one. I'm very curious what people have to say. What is the stock and the price? Not just the stock, but the price you're looking for, where you would really think it is time to go all in and do what I need to do to find whatever money I can to put it in. Because now that we're seeing discounts, obviously we're not getting crazy discounts, but some of these names are down 30, 40, 50%. Micron down 5% after that print. Like, I wonder what those names are for people and what price they're looking at. Hood at 40, Palantir at 75, Micron 360, NVIDIA below 100, Hood 45, NVIDIA 100, Micron at 200. I agree, Micron at 200. It would be a bit ridiculous. Bitcoin 20K, which did happen in June of 2022. I don't think it'll happen again, but we did see it get that low. Tesla 300, NVIDIA $1, Rocket Lab 20. Okay, so I do want to be realistic though. I like some of these, like Rocket Lab, to me, that price level is more 40. Then again, maybe I'm being too optimistic. NVIDIA, that price level is around 120. Yeah, it's not at below 100. Tesla is definitely lower 300s. It's not like 350, I think, because just the multiple is higher, right? SoFi 7, AMD under 200. Well, that's already there. So that's definitely an AMD bull. AMD 125, Nebius 50, AK Media pre-Palantir, SoFi 10, Nebius 55. All right, so I mean, these are the levels. So we're asking for about 30% drawdowns from these levels if you take the average of these prices for people to get really excited. Do we get those levels? I don't think so. 30% across the board. Do we get close to them? It's possible. Like Hood, I don't know if it's going to 40, but could Hood get to 60? Yeah, it could happen. I know the street's keeping it in a range, but if Bitcoin collapses and the market goes ugly, March has bad metrics, yeah, it could happen for Hood. So it's one of those things where we just have to watch out and see how bad things get. I mean, I really didn't think Microsoft would be below 400 this year when it was at 490 in January. You know, it hit 380 last week. So maybe the market will give us these opportunities. At the end of the day, we got to see if oil comes down, and I guess that'll determine how everything plays out. All right, that's it for me. Thank you, everybody. You guys can check out Steve. I will leave his link in the chat. Thank you all for being here. We'll be back tomorrow. Market open as usual and close, and we will be good for the next month and a half. We wouldn't have any traveling to interrupt the shows. You guys can check them out there. I think Trump's meeting with the Japanese prime minister. So we'll see if Trump says anything that is relevant for oil or the war or anything else. But this is the first time the Japanese PM, the new one, the lady, is going to be at the White House. And we'll see what happens there with Trump. All right. That's it. Thank you, everybody. Appreciate you guys. We'll see you guys tomorrow on the market open. Yes, the Ondas interview will be out. I'm going to edit it tomorrow along with all the other AIPCon stuff. It should be out Saturday. It should be outside. So all the AIPCon interviews and the NVIDIA interviews will be out Saturday. And you guys will be able to check all that stuff out. Thank you, everybody. I'll see you guys tomorrow morning. Bye, everyone.